Good morning, everybody. Good morning, Luciana. Welcome back. Hope you were traveling for fun, not work. Good to see everybody this morning. How's everyone doing? You guys ready? Guys, today's going to be a great day. We're going to talk a lot about what we see, what we're doing. We're going to talk about trust. Sometimes I have conversations with traders outside of the room, and trust seems to be that biggest thing that we need to develop, guys. And that's kind of what this classroom is designed for. This classroom is designed to help you study, to help you go through stuff. And you saw it. Let me bring it up. You guys know that I go and Google every now and then. I'm like, oh, I wonder about this. So, trust is the firm belief in the reliability, the truth, the ability, or the strength of someone or something. And guys, what you're doing right now with this software as you grow with it, as you learn to read it, is you're developing trust. Right now, you should, if you're brand new, have distrust. You should have skepticism, right? You don't know. You're not sure. They tell me that it works, but I want to know for sure that it works. They tell me these patterns win more than they lose, but I need to know that they win more than they lose. So what happens is that we talk about these patterns in classroom, and that's exactly what we do, guys. We talk about the rules, we talk about the looks, we make sure that they're met, and then through repetition, we develop trust. You develop trust. I've already developed my trust. Ultimately, you're going to have confidence, right? You're going to have a belief in this methodology. You're going to have faith that it works. You're going to have freedom from suspicion or doubt. I think that's one of my favorites right there. Sureness, certainty, certitude, assurance, conviction, reliance. Guys, you're going to have all these things that are going to make it easy for you to pull the trigger when the rules are met. It's going to make it easy for you to take these trades. It's going to make it effortless for you to feel comfortable and confident in everything that you're doing. And there is a very real path to get you to this level. So if you're brand new with me today, and I know that I've got some new people in here, and guys, I'm going to talk slow for a minute and let more people come into this room because 20 is not our typical group at all. So I'm going to make sure that everybody gets in here for this lesson. We're going to talk about a pragmatic, methodical, effortless approach. Jerry, I have Norton. I have the Norton utilities. I know very little about antivirus stuff. I'm the worst tech guy in the world. True story. I am. My brother said use it, so I did. And I'm happy with it. I have the Norton Utilities. I think it's antivirus. I hope so. But that's what John has me on. So guys, I also took an example this morning about trust. You'll see that when you see my screen back here. But before we do anything, every morning I trust that high impact news may move the market. Every morning I go to forexfactory.com. So if you're brand new, take this link, put it into your favorites. While your charts load, while you sip that first cup of coffee, go ahead and make sure that there's not something going on. Today is Wednesday, June 14th at 8:30 a.m. We had the core PPI, the PPI, M&Ms, they melt in your mouth, not in your hands. Guys, it doesn't matter what the news is. What we're looking for is this high impact, right? This medium impact, because it has the potential to move the market. Ron posted in the room, he's like, all that red and what a dud. It didn't do a lot this morning, but it had the potential to do a lot. And really part of trading is analyzing the potential and determining whether or not those risks are acceptable. For me, high impact news is an unacceptable risk to take because the market may spike and jump If I'm in a position, it might not only take me out, but it might take me out with 4, 5, 6, 7 point slippage because the market moves so fast. So I'm aware every day. I'm looking for these high impacts. I'm looking for these medium impacts. Guys, today at 10:30 in crude oil, we have crude oil inventories. It says that it's low impact, but if you are a crude oil trader, you know that the impact may be severe because there's a group of people waiting to see what this release is to determine what they're going to do in the market at 10:30 a.m. At 2 p.m., we have a lot of FOMC going on. Guys, what does that mean for us? That means that the S&P might be a dud today. That there's every major investor doesn't want to be on the wrong side of it. The S&P may not move a lot today, guys. Crude oil may be your market. Because of that, I'm pulling up NASDAQ as well to look at in the room. Guys, NASDAQ, the patterns are the same, the rules are the same, but it tends to move about 3 or 4 times faster than the S&P or crude oil, which is why I don't typically teach on it. So we're going to use it more historically. But so you'll see NASDAQ in the room. I'm not advocating that you trade NASDAQ, but what I am saying is that the patterns are the patterns, and what I teach happens on every chart, every time frame. But start out with that forexfactory.com. Guys, let Nexgen's page. Great question, Shogun. I do. And I had someone tell me, but Mark, I'm in Canada. But Mark, I'm in Singapore. Well, we're trading American markets. American news are typically what's going to move it, guys. So I go through my filters. That's such a good question, Shogun. The only thing that I'm looking at is US, and I'm looking for high impact, medium impact, and I'll put that low impact in there as well. But I'll have it cover the spectrum. Because if I select all of them and apply that filter, guys, I'll never trade the market. There's stuff going on in Europe and Great Britain and Canada and New Zealand. I'm not worried about that, right? What's that going to do to the American crude oil market? Unless something war breaks out in one of those, perhaps. So I'm going to keep it on US. I'm going to stay focused and simple, guys. And that's kind of the next message that I'm talking about. Keep it focused, keep it simple. I'm going to give you a path right now. If you're brand new, and who do we have in here that's brand new? Then, welcome to the room. It's nice to see you. Pastex, you were here, but now you're gone. Who else is here? Bruce, do I have you? Guys, we're going to keep it simple. There is a very, I hate saying very, how lazy. There is an extraordinarily easy path for you to stay on. And it's really 2 parts to get you in the right frame of mind, guys. Post your trades in class, track your time, your real-time performance in a spreadsheet. Nexgen's already provided you the spreadsheet, and I want to make sure that you can find it. If you go to your desktop and you go to Nexgen Study Picks, I'm going to show you right here in my file finder. You have the Nexgen 90-day worksheet. You have it in Open Doc if you don't have Excel. Guys, these are right in there for you, right inside of the Nexgen Study Picks license. Open it up. On day 1, let's get in the habit of using that spreadsheet. I'm going to show you how. And then posting pictures, guys. Posting pictures is the next most important thing that you can do. And when I'm done going through this little slide, we're going to go through it together. You're going to open up your TechSmith Capture. So if you're brand new, once again, open up your Capture software. And we're going to do it together. We're going to talk about how to take a picture, how to annotate a picture, and how to present that picture in class. But I can tell you without hesitation, with absolute conviction, that this is the fastest way to get to where you want to be. So Denise, Pastek, Ven, this is your classroom. This is a discussion, not a lecture. Participate. Like, participate to the point that you're worried that you're participating too much, and then participate just a little bit more. Post everything you do in class. Post everything that you see in class. And then every time you take a picture, get it into the spreadsheet. Guys, we're going to spend the first hour learning the trigger line and the Fibonacci rules for when it's okay to trade. I'm going to keep it simple and focused for you. We're going to talk about 3 rules. It's only going to happen on 2 charts. And you're going to have three very distinct advantages that get you into a trade. Simplicity. Um, you're going to simulate your trades, guys. You're going to get in there and you're going to mess everything up. And that's okay. I want you to. As long as you're presenting your pictures in class, we're going to talk about everything that you do. You're going to get feedback on what you do well. You're going to do feedback on what you didn't do so well. Guys, I am very much a cheerleader. I am going to look for the positives and celebrate the victories. And we're going to readjust the behavior that might be working against you. We're going to simplify. This says simplify to 2 trades in your plan. We're going to start with a high probability trend trade. We're going to start with a trend trade where every indicator on every chart lines up for the trade. This is a trade that typically wins 70 to 80% of the time. This is really all you need. If you can be patient, you don't need anything else to make more money than you could ever hope to make in your life. Take the best trades, maybe multiply your contracts, right? After class before the next day, you can use download replay, you can use market replay. You can go back, retrade the day, fix your mistakes, take more pictures, work on your management plan, and you can bring all of those pictures that you study after class back to class the next day and present them and get that same feedback, guys. Feedback is the key to what we do. That's why we have the live classroom. 15 hours every week. My sole purpose in life is to give you everything that you need to be successful. You're going to repeat this process every day until you always take the correct trades. Guys, that's the goal. Don't take trades that don't fit the rules because they're going to be a lower probability of winning. And ultimately, we're here to make money, right? We're here to win more than we lose, to grow that P&L, to have faith and confidence in this methodology, and we're going to do it through study. But in order to do it through study, guys, you've got to take pictures. So I'm going to drop down to a chart. And guys, this is NASDAQ. And one thing that I did this morning is I decided to reiterate the faith, guys. And this is exactly what you're going to learn today. You're going to learn how to recognize this look, how to take this trade, and how to make money with it. But you got to take a picture, right? You've got to take a picture and you've got to ask yourself, guys, this is what I was doing while I was talking about news. I was having faith in the methodology. This trade was running in the background while I was talking to you. Pull up your TechSmith capture and everybody hit that great big red button for me if you're brand new. So Pastex, hit it. Denise, Ven. Guys, click on that big red button. If you hover over one chart, it's going to show you one chart's worth of information. In order to get the best feedback, I need you to left click in the upper left-hand corner, and I want you to drag it all the way down to the bottom right, guys. Make sure that you get those price bars. Make sure that you get those timestamps because we're going to line up a big chart and a small chart. When you release, it's going to give you the option to take a picture. I'm going to click on the camera. Once I click on the camera, guys, up comes my image preview. This is how you and I are going to have a conversation. And your job is going to be to write your rules on your chart. If you want to write them in white, that's totally cool. I prefer that you don't do it in black. It's really hard to see that black lettering. Gold seems to be popular. I'm going to go with white today. Guys, I'm going to draw an arrow. And you're going to know exactly the spot that I'm talking about. I'm going to use a shape. Maybe I'm going to circle my profit targets and I'm going to circle my entries. I might use the arrow to say, hey, look, Mark, I made money from here all the way to here following the rules. I'm going to use a call out button and I'm going to talk about the rules that got me into the trade. I'm going to identify momentum. I'm going to identify a clear path. And guys, I'm going to teach you how to recognize these. And I'm going to identify an entry at an area inside of favorable large triggers. Guys, this is your recipe for success. Take these pictures, identify your rules, and when you've annotated your chart, when you've started your half of the conversation with me, Come down to this upload button. When you click the upload button, it's going to give you a link to screencast. Click copy, come over to the chat box, and paste it in, guys. The second hour, the third hour, all I do is talk about your trades. All I do is look at what you've done, provide you feedback on everything that I see, and help you move forward. The next step is going to be to open up that spreadsheet. This is my version. The first page is your tracking sheet, guys. You can paste that link in there. If you right click, let me show you a little trick here, guys. If I paste just the screencast link, it doesn't tell me what kind of trade it was. But if I go to the insert tab and click on link, it's going to let me provide a hyperlink, which means that I need to paste the address like I'm going to google.com. Under text to display, I'm going to call this the perfect short. And I'm going to click OK. Jerry, I'm not sure. To be honest with you, I'm not sure. Let's look at this. I'm going to use the Googles. Looks like $500 on the mini. NASDAQ, micros, $100. That's not what we're looking for. Let's go back and see if we can find Ninja Traders, right? All the answers are always out there, right? Almost there. Wow, that's really small. Here we go. So for the NASDAQ E-mini futures, it is $1,000 to control it. And it's $5 a tick, $20 a point. I knew we'd get there eventually. Guys, if you're curious about margin details, there's your link. Should probably keep that in favorites, but what fun is that, right? Guys, I'm in my spreadsheet. I've got it in there. What's today's date? Today is the 14th. So today on June 14th, I took the perfect trend trade. You're welcome. I'm going to identify it as the perfect trend trade. How did I feel? I felt confident because my rules were met 100%. I was coming from a termination that created a full reversal. I'm identifying it as strong. Guys, I had momentum in my favor. Everything agreed with the trade 100%. And I won. And I won. And under notes, guys, this is important. This was effortless. This followed the rules. This should be the one. So you're going to create this trade journal every day. These are the trades I took. This is how they felt. And then tomorrow morning, I'm going to go back and I'm going to study everything that I did today, guys. What worked for me? What didn't work? Because you're going to begin to recognize patterns in yourself. Maybe you like to trade into termination conditions. Maybe you're not willing to wait for momentum. You're going to see that reflected in your results. What felt easy and kept you relaxed? I can tell you that following the rules keeps you relaxed. When you start to break the rules, when you start to hope that a trade works, it starts to feel forced. It makes you nervous. Guys, a brief historical study each morning will prepare you for the day and accelerate the learning. When you have a trade that fits the rules 100%, you can put it in that second page of the worksheet, guys, of the spreadsheet. These are my favorite looks. These are my personal trade setups. These are the trades that I take because the rules are met. Not because I hope they win, not because I want them to win, but because the rules that I learned in class are met 100%. And this was a perfect NASDAQ short, guys. So I'm going to label it as such, and I'll be able to come back and study that. For those of you that are brand new, I'm going to give you a cheater. The spreadsheet that Nexgen provides you has about 50 of these. There's over 200 rules-based entries. I just put it in the room for you. Steal it, take it. Tonight when you go home, click on these. Because what we're doing right now, guys, is we're developing trust. And trust comes through repetition. Trust comes through the memory of confidence, right? Trust comes through creating this belief. The more pictures you take, the more likely you are to trust. Do your own research. I implore you. Guys, prove me wrong. Please prove me wrong. But what we're going to do in the next 30, 40 minutes is we're going to talk about a set of rules that gets you into this trade. We're going to talk about a set of rules that provides you this result more often than it doesn't. That's the goal for you. The highest probability trend trade, guys. The trade where every indicator on every chart agrees for the trade. Everything that I talk about is going to come straight from the tutorial section. I'm going to click on this button, and this is going to bring me to my rules. So sit back, pour a cup of coffee, and guys, let's have some fun. Let's talk about rules. There's only three. Three rules that provide three advantages, guys. In order to take a trade, I have cleared my mind of opinion, and I have two options. Either my rules are met or my rules are not. Why? Because my rules provide a statistical advantage. My rules have been proven through back study, proven through research, proven through your performance to win more than they lose. Guys, this is a recipe for success. My three rules provide the three advantages. I will have the advantage of momentum, I'll have the advantage of a clear path, and I'll have the advantage of an entry area every time I take a trade. These three rules happen on only two charts. Let me give you a copy. Guys, steal every picture I give you. They're important. These three rules happen on two charts, guys. Keep it simple. A lot of you are chasing multiple charts. Mark, I'm not making any money. I've got 17 charts. I can't figure out why I'm struggling. It's because you're thinking too much. You don't have to, right? Two charts. Large chart. Your large chart is going to define direction. Your large chart is going to define momentum. And your large chart is going to define the areas. It's a broad stroke of a brush. It's showing the overall opinion of the market, guys. This is large crowd mentality. This is what the investors are doing. This is the momentum that they've created. Rule number one is met on the large chart, the advantage of momentum. Rule number two is met on a large chart, the advantage of a clear path. And unless I have those two rules met, I never turn my attention to the small chart. The small chart is like that shady guy in the shadows, you know? He's going to try and tempt you, or she's going to try and tempt you, whichever is appropriate. The small chart's going to refine the broad stroke of the brush. When the first two rules are met, rule number three is going to have me pinpointing my entry point, so much so that I'm going to use a limit order, and I'm going to wait for the market to come to me. I'm going to refine the broad stroke, I'm going to be able to reduce risk, and I'm going to be able to increase my profit potential. Guys, so two charts, three rules. Keep it simple. If you're brand new, keep it simple. You don't have to be smart. John Novak was already smart. He's giving you everything you need to just replicate the successful path that he's created for you. So on these two charts, I'm going to look for the three rules. And when the three rules are true, when the advantages are present, I'm going to take a trade, guys. So it starts with the trigger lines. Everything starts with the trigger lines. The trigger lines are going to determine the direction of the chart. And guys, it's so easy to determine the direction. So easy a caveman can do it. If the background on your large chart is green, you're in an uptrend. You're only looking for rules to be met for high probability trend trades long. Guys, simply trading with the trade creates an advantage on its own. If the background is red, you're in a downtrend. You're only looking for rules to be met for high probability trend trade short. Guys, this is the first advantage that you provide yourself. Don't fight the trend. True story, I had someone say, but Mark, I'm colorblind. Well, that's okay. When your small triggers break above the large triggers, that's what paints the background green. So your small triggers in an uptrend should always be above your large triggers. Small triggers are the solid lines, large triggers are the dashed lines. When your small triggers break below the large triggers, the background paints red. So when you're looking for short trades, the small trigger should always be on the correct side of the large triggers. And when that happens, it creates that first advantage. It creates that momentum. When the small break above the large, when the small and the large are wide and angled in the direction of the trend, and the space is created between the two trigger lines, this is what we call odds favorable momentum. You're going to hear that in class all the time. Did you have odds favorable momentum? Were you trading with the advantage of momentum? Guys, this strong trigger look is a precursor for everything that you do. When you have momentum, the market is likely to push in the direction of the trend. In a downtrend, smalls below the large are wide, they're angled in the direction of the trend. It's that space created between small and large that lets me know that the market is likely to continue in the direction of the trend. Odds favorable momentum will take you about 3 seconds to master. And if you go back to a live market, whoops, I just minimized my charts. Here we go. If I go back to a live market and I blow it up and I take off all the noise and only leave it trigger lines, I want you to see just how easy it is to recognize. From the point where the smalls break away until they return is when you have odds favorable momentum. Guys, this is your best of the best look. And you'll see that it doesn't happen all the time. Sometimes that market in the middle of the night goes a little sideways as they make decisions. But if you scroll back once again, you'll see that odds favorable momentum. Odds favorable momentum, it continues down. Odds favorable momentum, it continues up. Guys, we're going to develop a little bit of trust in the ability of this momentum to carry you to the next areas, to get you to those next key Fibonacci areas. I'm going to put my indicators back on because when we come back and talk about clear path, we're going to need those. If you commit to this look, guys, it's like scissors opening. When the scissors are open, you're prepared to cut. When the scissors close, when those smalls return to the large, we call this a weakening of the large triggers, guys. And when you weaken large triggers, anything can happen up or down. You've lost the advantage of momentum. If you choose to take a trade without momentum, you have forfeited willingly and knowingly that first advantage that should be getting you into a trade. We just looked on the NASDAQ and you saw that it doesn't always happen, guys. Odds favorable momentum, this is when the conditions are right to buy or sell that pullback at an area on the smaller, faster chart to get that entry area for your highest probability trend trade. You'll see these tails on the 13.2 after the fact. What happens in one bar on the 13.2 happens in 15 to 30. That's how we're able to refine. Odds favorable momentum, the market pushes up. Anything can happen triggers. Notice that that's right before the market turns. Anything can happen triggers right before the market turns. You get that odds favorable and the market continues down again. And then we get that indecision. The smalls are up, the trend is down, the large and the small don't agree. Guys, this is where you as a Nexgen user have the advantage of just sitting on your hands and waiting for the conditions to be perfect because your money is worth a perfect setup. Let it sort itself out. You don't need to predict. You don't need to hope. You don't need to wish. All you have to do is be patient because ultimately that odds favorable momentum is going to come back. It happens every day on every market. There is no reason to predict. So I'm going to give you guys this picture as well. Do me a favor if you're brand new, and guys, I'm going to be calling out on you just a little bit by name. Pastex, are you comfortable with this? Denise, does it feel good? Can you do it? Is Iceman in here? Guys, I know I've got some new people in here. Let me know that you're comfortable with what you're seeing. Go ahead and get in the habit. Participate. Type a Y in the room. Let me know. I'm committed to you right now. I need you to be a little committed to me. Let me know that we're doing this the way you need it. Awesome. Thank you so much for that. Guys, rule number 1 provides the advantage of momentum. Once we have that momentum, it's time to establish a clear path to make sure that there's nothing in between your entry and your target. A clear path, once again, uses the trigger lines. Awesome. And it's going to help us determine whether or not a termination condition has been reached. Guys, a termination condition is nothing more than a Fibonacci area that may reverse the market. These are the areas. Let me give you another picture, right? This is a great roadmap for you new people. Areas that may reverse the market are a divergence high. This is a magenta line. And this magenta line forms from a pivot when there's a loss of momentum. Guys, you don't have to do any math. You don't have to do any comparisons. But when that magenta line forms from a high or this cyan line forms from a low, you know that the market's losing momentum. This is a key visual indicator. These may reverse the market. Red Fibonacci resistance, blue Fibonacci support, and yellow 1-to-1s may reverse the market. Notice that I use that keyword may because it's not guaranteed to reverse the market, but it takes away your advantage of a clear path when a simple two-part process has been realized. In order to understand whether or not an area may stop the market, the first thing that has to happen is price reaches that area. And if you look at this picture, those dynamic Renko bars are trending down. They're coming down, price is moving down, and then they hit Fibonacci support. When price reaches that Fibonacci support, check your trigger lines. Ask yourself, where are the triggers? If they remain above support, support may reverse the market. It may create a bounce that's untradeable. Price reacts to Fibonacci. Deep pockets investors react to these key Fibonacci areas. You have the advantage of knowing where they are long before they ever get there. If everything remains above, don't take a short. The path isn't clear. It's really that simple. And guys, I take pictures all day long to help you guys realize things. So let's go through a little bit, recognizing the clear path, or let's recognize when the path isn't there. Here's the picture, termination conditions at a high. And you're going to have to study these. 3 pictures aren't going to make you an expert, right? You're going to have to scroll back and take a look. Here's one of those pivots that creates a loss of momentum. It gives me that magenta line. This on its own is not a termination condition because price didn't reach it. There's your recipe right here. Price reaches that magenta high. All the trigger lines remain below. Guys, we now have a termination condition. This is your visual cue. No more long trades until either the area breaks, or if the market reverses and the rules are met, you'll look for a short. Price reaches the area, no trigger lines break, no more long trades. Price reaches the area, no trigger lines break, no more long trades. Great question, Iceman. Let's go back to the picture. So your small and large triggers, man, I love that you asked that question. Your small and large triggers work together. So when we talk about odds favorable momentum, when I say that they need to be wide and angled in the direction of the trend, what I mean is that they're not pinched, they're not flat on the large triggers. The small triggers stay pretty constant. But it's the correlation between the two. In an uptrend, your trigger lines, both large and small, should be angled straight up, strong, pushing in that direction of the trend. In a downtrend, they should be wide, right? No space between the two on the large triggers, no space between the two on the small triggers, and then they work together. And it's the space created between the two of them that lets me know that the momentum is at its absolute highest. And you'll see that it starts, and as momentum decreases, the small triggers return to the large. The space decreases between the two and ultimately takes you over to those anything can happen triggers. Does that help a little bit? It's the space between the small and the large. Perfect. And then guys, here's one of those ones where I ask you the silly questions. If you only traded with odds favorable momentum, would it keep you out of a lot of maybe trades? I imagine that it would. So with that momentum, make sure you don't have a termination condition, right? Make sure price didn't reach an area and your trigger lines didn't break through. There they are at a high. Guys, when a termination condition from a high creates a full reversal, we call that a strong top, and your strong top is a precursor to the highest probability trend trade you can take. If we have them at highs, we have them at lows, right? Price reaches an area, trigger lines remain above. No more short trades. It really can be that simple. Price reaches support. None of the trigger lines break. No more short trades. Price reaches that divergence low. Remember, the pivot isn't a termination, but when it reaches that cyan line, trigger lines remain above. Now it's a termination. No more short trades, guys. This is a safeguard for you. This keeps you from trading into these areas. Deep pockets institutions, guys, they know where these areas are. When John Novak created the algorithm for this software, he had a friend that was in the pits in Chicago. And as John created this algorithm, picking the absolute best of the best for these high and low areas, he used to call this guy. And this guy's job was to know where the institutions were buying or selling, where they were reacting, what prices they were going to make these decisions at. What happened, and when John Novak knew that the algorithm was right, is he found himself within 50 cents of these key areas almost all the time, consistently. You now have the advantage of recognizing those areas, and you also have the advantage of recognizing when those areas may stop the market cold in its tracks, guys. If you have a termination condition, you do not have the advantage of a clear path. Is everybody comfortable with that two-part recipe? Price reaches, no triggers. Guys, sit on your hands. 90% of what you do during the day is going to be waiting for the advantages, right? Waiting for the momentum, waiting for that clear path. When is the path clear? Guys, that path becomes clear when small and large triggers get to the other side of the area. So if everything is coming up and price reaches resistance, absolutely no triggers through, no trades. No trades for the moment. One of two things are going to happen, guys. It's either going to break or it's going to reverse. That's it. One or the other. You have to wait for it to happen. The area is considered broken when both the small and the large triggers get to the other side. Resistance begins to behave as support. Notice that it broke. It has odds favorable momentum. And there's another one of those tails, guys. There's one of those pullbacks, one of those potential entries on your 5-1 chart. Best of the best, having momentum, having a clear path. So I'm going to share this one. If you're a brand new user, I want you to keep it this simple. You either have a clear path or you don't. You've either made it to the other side or you have not. And what's going to happen is this is probably going to increase your chances of winning. What if you insisted on a clear path? Would it make your trading more profitable? I can say with absolutely no uncertainty it would. Remember that all of these are found right there in the education material, guys. And when we come through, you'll see it. There's that divergence line, but when price reaches it, triggers don't break, it becomes a termination. Price reaches a termination condition. Because this termination condition creates a full reversal. Large triggers go from red to green, smalls get above. Ultimately, it gives me a clear path and the momentum that I need. And there's another one of those circles. Good morning, Debbie. Guys, a high probability trend trade, this simple 3 rules on 2 charts trend trade that happens after a termination condition that creates a full reversal, that's your best of the best trade, guys. This is your first 30 days. Finding the entries for this highest probability trend trade, not worrying about management, not worrying about wins and losses, not worrying about anything other than finding that absolute best of the best entry. Because this is a trade that typically wins 70 to 80% of the time. Guys, these 3 rules that I'm talking about are going to teach you to read your charts. You're going to understand where the market is likely to stop. That's those termination conditions that we just talked about. You're going to understand where the market is likely to go. You're going to be able to use Fibonacci and that great momentum to pick out targets. And guys, the only thing left in our equation right now is that advantage of an entry area. And that advantage comes from the area where the market is likely to continue. And you're about to learn how to pinpoint that area on a smaller, faster chart so that you can reduce risk and so that you can increase your profit potential. Guys, I get excited about rule number 3 all the time because it absolutely amazes me how often it happens and how accurate it is. Rule number 3 says that you're going to use a limit order, meaning that you're going to wait for the market to come back to you. And you're going to buy or sell depending on the direction, right? If we're in an uptrend, you're going to buy. If we're in a downtrend, you're going to sell. but you're going to sell a pullback. And a pullback is this tiny little move counter to the underlying trend. It's that little move that creates the tail. And guys, you're going to buy or sell that pullback at an area inside of favorable large triggers. I'm typing this out as I talk. That's why I sound funny. There we go. You're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. Guys, we're relying on the large chart to define areas, to define direction, to go with that mentality of all the people with the deep pockets. And there is always a group of yahoos that want to fight it, right? The small crowd. The small crowd says, no, large crowd. I want it to go down, and I'm going to dump a little money in there and try and make that happen. You're going to take advantage of the small crowd while you follow the large crowd. And how are we going to do that, guys? When the rules are met on the 13-2, everything says up. Your triggers should be up. You should have odds favorable momentum on your smaller, faster chart. Your large triggers should be wide, angled in the direction of the trend. And favorable large triggers means that your large triggers, the smooth triggers, and your synthetic triggers on your smaller chart, those ones that look like they have steps or stairs, those should be one on top of the other. They should be overlapping. They should be like a snake, right? Because when you have this look, it's going to give you the smallest window of opportunity, the smallest point for that market where it's likely to continue. So guys, I'm going to share this picture of favorable large triggers. Let this be a necessity, trending one on top of the other, strong in the direction of the trend. Because when they are, we're going to look for areas that fall within. High probability trend trades always come from an area. It's like throwing a tennis ball up against a wall. It creates a bounce point. Those areas can be Fibonacci support or resistance. It can be yellow one-to-ones, or it can be a mid-band. Our job is to define that window of opportunity, that point where the market is most likely to continue. And we're going to do that when the market gives us a reversal bar, when that small chart, when the small crowd begins to push against the overall trend. You're going to see this reversal bar print. Your job is to identify the highest point of the triggers to the lowest point of the triggers. Where'd my mouse go? And then find the areas that fall within, mid-bands, fibs, and one-to-ones. These large triggers are a moving average, and they're coming up like a shark about to breach. So if you have an area a tick or two above, it's probably going to be enveloped. It's probably going to get swallowed up by those triggers. So a tick or two is cool, right? Your window of opportunity for a long trade goes from the highest point of support to the lowest point of support inside of favorable large triggers. We're going to use a limit order, and we're going to wait for that market to come back to us. You're going to right-click on your chart at the top of the window, and it's going to give you the option to buy limit 1, buy limit 2. You're going to activate it, and at this point, guys, everything that you're in control of is done. The only thing that you're in control of is making sure that you have momentum, making sure that you have a clear path, and making sure that you've identified the entry area, that highest point of support inside of favorable large triggers. If the market comes back to you, you're in a long position with those three advantages: momentum, clear path, and an entry area. You're in the highest probability trend trade, guys. Your initial stop, your protective stop, is going to go below the window of opportunity, below those large triggers, below those one-to-ones. And I want you to embrace this phrase. Your stop is going to go where the market should not. If the market extends beyond that window of opportunity, we don't want to be in this trade anymore, guys. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time, which means that losses are a normal part of a positive equity curve, which means every now and then that stop's going to get hit, but we keep it where it shouldn't go. We're going to minimize our losses so that we can maximize our profits. And guys, this is a trade that I will never miss when it sets up, because 70 to 80% of the time, this is my result. I can tell you all day that this trade works. I can tell you all day that these rules are true. Your job is to study it, guys. Your job is to go back and see how many times it works. Take 100 pictures. How many of them win? Because you wait for the pullback, because you let that little retracement happen and trade from an area, you're going to be able to reduce your risk below that reversal bar in the direction of your trade. And I think I have a picture. There we go. I take pictures of everything. Because you waited for the pullback, your profit potential's increased. You're going to use momentum and Fibonacci for these great targets ultimately. Guys, this is your window of opportunity. You'll notice that I drew a box from the top of the triggers to the bottom of the triggers. And then I refined that box to the highest point of support to the lowest point of support. And guys, I entered at the top because of the momentum of the 13.2, because of the clear path on the 13.2. This is your trade, guys. We're going to take every day for the rest of your lives to make sure that you're comfortable with it. We're going to take every opportunity to go back and study it. And guys, I'm going to go back right now. How do I recognize these trades? I'm going to scroll back historically. And I'm going to find one of those circles, right? One of those tails. If I circle it and it lines up with an area of resistance inside of favorable large triggers, well, I know that I had a rules-based trade. And I'm going to come through again. There's that odds favorable momentum. There's one of those tails. Let's see what it looks like. Not all of these are going to be trades, but this is a great way to develop trust. Look at how much motion there is in the market, guys. And we're being patient, and we're waiting for a pullback directly to support inside of favorable large triggers and looking for the opportunity to make money. Guys, is everybody comfortable? You can do this. Your software goes back 10 days. Notice that price here on this one bar hasn't reached resistance yet. My path is good. If I put a rectangle around this one bar, whoops. That was the worst rectangle ever, guys. I'm going to draw a rectangle around this one bar. I'm going to try to. Look at how many bars it encompasses here. We're taking the broad stroke of the brush, we're refining it on the 5-1, we're waiting for the pullback, and we're taking it right at the area of support inside of favorable large triggers. Guys, this was a pretty easy winner. Your first 20 days should be dedicated to finding this look. Not odds favorable momentum. I'm not worried about the tail. And guys, look at these anything can happen triggers. Not my best look. So I'm sitting on my hands and I'm waiting for the advantage of momentum. Guys, that's the NASDAQ. NASDAQ is like a angry person. This is the S&P. Not a lot going on. FOMC day, guys. I want you to see this look right here. The small triggers have broken through. The large triggers are not. Guys, this is what we call a 50-50 trade. When 50% of your trigger lines break through an area with odds favorable momentum and 50% do not, this is not in the realm of high probability, guys. This is your first medium probability trade. This is a trade that means that this area has the potential to break, but it hasn't broken yet. When the smalls break through, when the large do not, guys, this is a 50-50 trade. It does not have the advantage of a clear path. 6980 has the potential to break, but it has not broken. Because it has not broken, I have given up the advantage of a clear path, which means that both my momentum and my entry area need to be perfect, right? A medium probability trade means that there's a small issue. The issue is the area hasn't broken. That odds favorable momentum is going to help it break. That perfect entry is going to help it break. You'll see here the smalls went through, the large did not. The area ultimately holds. Here the smalls go through, the large do not. The area ultimately breaks. How can I have the advantage? Guys, when I have this 50-50 look, you can see that I no longer have the advantage of a clear path. If divergence prints on my 5-1, I don't take the trade. If my window of opportunity is huge, I don't take the trade. I'm not willing to risk that much on a trade that's only medium probability. If my trigger lines are not their strongest, I don't take that trade. Because I'm not going to forfeit momentum when I don't have a clear path, guys. 50-50, look, same thing. No divergence, small window, strong triggers. I'll take that trade all day long. Smalls are through, large are not. No divergence, small window, strong triggers. I'll take that trade all day long. Guys, ultimately, your job is to gauge advantages. If you're a brand new user, let those advantages be there. Let those advantages be present each and every time you take a trade, because when they're not, you reduce the chance of success, guys, and confidence comes through the memory of success. This was a 50-50 trade. It had divergence. It ultimately fails. You know now that that's one of the things. Great question, Rob K. Let's talk about favorable large triggers. What does it mean? It means that your large triggers and your synthetic triggers are one on top of the other, wide angled in the direction of the trend, overlapping. That's your best look, Rob K. Why? Because it creates the smallest window of opportunity. Let me show you a picture. Guys, I have pictures for everything. This one is called split triggers. What happens when they're not overlapping? That is so fuzzy. Let me figure out where my split trigger picture is. Well, they were here a second ago. There we go. Sorry, I knew it was somewhere. So Rob K, when I have split triggers, when the large and the synthetics aren't overlapping, I want you to see something here. And this is really a cool lesson. At the time of the reversal bar, and I know that's kind of small, I have one-to-ones inside of favorable large triggers all the way down here, and I have a mid-band inside of large triggers all the way up there. Look at the uncertainty, right? When they're split, that's huge. What an enormous amount of risk. And is it going to bounce at the top or is it going to go to the bottom? We never know. That's why we create these windows of opportunity. Here's a great example of getting in with split triggers and getting stopped out when it ultimately hits the synthetics. So Rob, if you insist on those overlapping, those favorable large triggers, look at how clear, concise, consolidated your window of opportunity becomes compared to that split trigger look. As you grow at the software, there may be a point where you're comfortable taking split triggers because of the other conditions going on. But until you're a chart reader, until you can identify these things effortlessly, there's really no reason to risk it. Sometimes, right? So Rob, you have to decide whether or not that's your entry. I can't tell you that, right? What I can tell you is that when they're split, your risk increases. So let's do an example here. Hypothetically, we're waiting for a trade, right? And if I get a reversal bar right here, I have a mid band at 44.20, and I also have resistance at 23.25. My window is 12 ticks wide, which means that my risk is 16, 17 ticks, right? On a 50-50 trade. Are you willing to risk $500 on a maybe trade? That's kind of what you're asking yourself there. But if it becomes a little more consolidated, it becomes a little easier to justify that risk. So now we have another 50-50, right? We have smalls through the area, the larger not. There's your reversal bar. I've got one line inside of those triggers, maybe two, from 19 down to 7 down to 18. But it's just 50-50. If this divergence is true, I'm going to cancel my order. If it's not true, I'm going to right click and I'm going to click buy limit 1, and I'm going to wait for that market to come back to that potential area inside of favorable large triggers if a 50-50 trade is part of my plan. But since they're right there on top of each other, it's a pretty tight little area. Does that make sense, Rob? So ladies and gentlemen, your first 20 days should be spent looking for entries. Your first 20 days should be nothing more. You're welcome. And guys, this is how this classroom works. Ask a question, get an answer, right? Don't ever sit and wonder. Don't ever feel like you're going to let yourself fall behind because you don't want to raise your hand. I'll stop what I'm doing and make sure that you're taken care of. All right, brand new folks. As I go through this, Iceman, this is for you. Pastex, this is for you. Denise, Ven, this is for you. This is a high probability trend trade checklist. These are the conditions of the trade to get you the absolute best of the best entry. These are the rules that you should write on your chart every time you present it. These are the rules that you should be following to give you the highest chance of success. Guys, print this out, put it on your desk, grab a Sharpie, and make sure if you check yes to each and every one of these boxes, you have a trade that typically wins 70 to 80% of the time. If you need visual cues to help with it, here is that exact same checklist. And I stole pictures because this is what I do. Great question. So, Ven, this is your midband. I'll bring it up right now. The midband is a moving average. That's all it is. When price trades above the midband, visually it turns green, letting you know that it's going to behave as support if the rules are met. When price trades below, it's magenta. It's a visual cue. If I'm looking for shorts, I'm looking for that magenta midband. If I'm looking for longs, I'm looking for that green midband. But I'm looking for it to be inside of favorable large triggers. Does that make sense? So on your 5-1 chart, it's one of those areas that I'm willing to take a trade from if the rules are met and it falls inside of favorable large triggers. Great question. Great question. Guys, here's your high probability trend trade with all the pictures stolen from the resources. What is a good top or bottom? Well, it's a termination that creates a full reversal. What does odds favorable momentum look like? There it is. How do I know if I have a clear path? And what does my window of opportunity look like? Guys, these window of opportunity pictures, I'm a big fan because if I'm going to tell you to look for the best of the best for that window of opportunity in the beginning, I want to remind you that it's inside of favorable large triggers. When the reversal bar prints, when those triggers are favorable, it's only the lines inside. I'm ignoring these one-to-ones because they don't fall within the large triggers, the favorable large triggers. I have 1-to-1 in a midband inside of favorable large triggers. I have zero concern for this Fibonacci support outside, guys. It is outside of that area where the market is likely to continue. These 1-to-1s, this Fibonacci resistance beyond the large triggers, guys, my window is very precise. Reversal bar starts it from the bottom of the triggers to the top of the triggers. What are the areas inside? Don't worry about these areas outside, guys. Keep it simple. From the mid-band to the 1-to-1, notice that it could go to the bottom, but it bounces from the top because of the momentum, and I'm not worried about support below. Your job is to take this picture, guys, over and over. Take these pictures, identify these. I've given you high probability trend trade checklists, right? I've given you the one with the pictures. I've given you the one with just the writing. This defines the advantages, how to recognize them. There's even a link to a video that'll discuss tops and bottoms termination conditions. And now the only thing for you to do is to practice over and over. Practice. Go back, circle those tails, look at these trades, make sure that they fit the rules, and present them in class. I'm going to give you one more gift. I'm probably going to give you more than this. My goal for you is to be able to take this trade, to focus on this trade and only this trade initially. Get those entries in. Manageable trades come from great entries, guys. So here's your simple plan for consistency. I don't ever give trading advice. I don't ever tell you when to take a trade. I don't tell you when to not take a trade. I'll never tell you how to manage your trade. I'll look at your trades and I'll talk about what I see, the advantages, the disadvantages, and how perhaps it could have been managed better. But my goal, my responsibility is not to write your plan. Your goal, your responsibility is to write your plan. I may accidentally drop this simple plan for consistency into the room. Should you choose to adopt it, that's great. Make it yours. Never fight the 13-2 direction, guys. Don't trade against the trend. It rarely works. Don't fight the triggers. Don't trade against it. It really works. So Vin, great question. We don't trade the large chart wicks because we don't know, and you're going to realize that I have a million pictures. We don't trade the large chart wicks. That is an after the fact, right? If you scroll backwards and you see strong triggers and no terminations, and you see one of these wicks, circle it. Rule number 3 is what we're trading. We're trading areas inside of favorable large triggers. But what you're going to find is that when you go through and do your historical study, Vin, when you say, hey, Mark, I'm going to go back 10 days and I'm going to look for opportunities in the market, it's just to make sure that the rules are met, right? You're going to scroll back, and if you see one of these tails on the 13-2, you're going to circle it. And if that tail lines up with an area of support right at favorable large triggers, well, then you know that you have a rules-based trade. I'm not trading the tail. I'm trading the area inside of favorable large triggers. And if we go back a little bit, and even though this one's into a termination condition, let's circle it. I'm not trading the tail. I'm circling it, and I'm scrolling back. I'm trading the area of resistance inside of favorable large triggers. Does that make sense? Guys, let's do a bar by bar entry together. What do you say? We'll get rid of our cheater dots. So let's start like this. All right. Rule number 1 says that I have to have odds favorable momentum, and that means that the small triggers are below the large triggers. There's space in between the two. Give me a Y in the room, guys. On my large chart, do I have that best of the best momentum? Do I have that advantage? Small's below the large are wide. This is your best look for a trade. Learn to recognize this, guys. This is instantaneous. Then I have to look and see, did price reach an area? Has this bar smacked into Fibonacci support? Yellow 1-to-1s? Has it hit? What else do we have? A divergence low? Guys, do you see how the path is clear? Price hasn't reached an area. Once again, I'm going to wear out your Y button. Give me a Y if you see it. There's nothing in the way. I have the advantage of momentum, and I have the advantage of a clear path. Guys, this is the first thing that you're going to do, is you're going to learn to recognize this look on the 13-2. When you have it, I don't need the 13-2 anymore. It has told me that it's time to look for an entry. This is going to be the look on my 5-1, guys. Everything says down. I'm in a downtrend. Everything's cranking. But this is a horrible look, isn't it? Guys, the market moves. You've identified long before your entry that we're looking for an entry. So the market's trending down and you're thinking to yourself, man, it's going without me. There's all this momentum. I'm never going to get a trade. And I'm going down and I'm going down. And some of you are going to say, but Mark, it hit support on the 5-1. I don't care. I have a clear path on the 13-2. I have odds favorable momentum on the 13-2. I'm only refining this bar, looking for an entry. Do you notice how my large triggers are beginning to catch up with one another? There's a mid band inside of those large triggers, guys. All I'm waiting for at this point is a reversal bar. Come on, market, give me a reversal bar. There it is. I'm going to create a window of opportunity. That window of opportunity goes from the lowest point of the triggers to the highest point of the triggers, so I know that it's somewhere inside of here. But I can refine it even smaller. From my highest point of resistance to my lowest point of resistance inside of favorable large triggers. Guys, I'm going to right click on the chart, and price is trading in the wrong spot, so I can't do it here. I'm going to right click on that chart and I'm going to activate a limit order a couple ticks below that window of opportunity. Is everybody with me so far? The 13-2 said odds favorable. The 13-2 said clear path. I have the advantage of momentum. I have the advantage of a clear path. My reversal bar prints. I identify the area of resistance inside of favorable large triggers. I right click on that chart and I have a limit order waiting for the market to come to me. And here it comes, right? But Mark, it's bouncing off a fib. Fantastic. Termination conditions happen on the 13-2 chart. This fib's giving me the bounce that I need. And the market comes up, and it comes up, and that mid band is working its way down, isn't it? Guys, it's okay. Move your order. Drop it a tick. Don't trip over pennies in your hunt for dollars. And the market comes up, and guys, you're now in a short trade. You're in a short trade at 44.14. 44.14, guys. Your initial stop goes above those large triggers where the market shouldn't go. You have approximately 2.5 points of risk, about 12 ticks of risk. That's normal for a futures trade. Once the market pulls back, you have your stop in place. Guys, I'm going to show you a mechanical, methodical management plan that has you looking for $100, which means 44.12 is your first profit target. Let's make it green. Let's make it the color of money. There we go. And I'm going to show you a mechanical, methodical plan that has your second target here at 44.10. $200. That's it. Only looking for $300 on this trade, guys. That's all. My initial stop, we'll make the stop red. We'll make it tomato. My initial stop is where the market shouldn't go, outside of the window of opportunity. My entry is where the market is likely to continue at that area of resistance inside of favorable large triggers. And I'm only looking for this market to get to $100 and $200, guys. That's a $300 trade in the highest probability fashion. Nothing for me to do right now. I'm either stopped out of this trade because it's not going to work, because it's part of that 20 to 30%. I'm going to allow the market to be wrong with dignity. But what I'm waiting for is a reversal bar. Oh, there it is. Guys, this reversal bar says I can move my risk 2 ticks above it, which has a stop at 14.75. I was in at 14 flat, guys. 3 ticks. 3 ticks of risk on a high probability trend trade. My first profit target was $100, guys. I hit that first profit target with that reversal bar. I have $100 in the bank. This mechanical, methodical approach says that when your first target is reached, go break even. You have $100 in the bank. You have absolutely nothing to risk. The only thing that's going to happen now is either you are going to take $200 profit or you're going to get stopped out break even. But $100 is in the bank already. The market comes back up and it just stopped you out break even, guys. You made $100. This is your highest probability trend trade, guys. This is your mechanical methodical. Is anybody upset about $100? If you do that 3 times a day, it's a $300 day. Doesn't feel like much, right? But that's a $1,500 week, guys. That's a $6,000 month. That's a $72,000 year on a trade that doesn't work 3 times a day. The reality is these trades work more often than they don't. Why did this one bounce so much? You want to see why it bounced and took you out? Because if I put my indicators back on this chart, guys, you're going to see that this trade was directly into a termination condition. This trade was directly into a Fibonacci area with absolutely no triggers through it, and it created a bounce that took me out of a trade. This is why we trust termination conditions. Guys, that 50-50 trade took us right up to the key Fibonacci area with all that momentum, right? If you entered at 2150, right at that mid-band, right on top of those large triggers, that was a difficult entry, right? It was a little bit above. It may not have gotten you. Jay Solar, good to see you in the classroom. So you say 50-50 tops or bottoms can create nice odds for favorable momentum? Absolutely not. Do you know what I say creates odds favorable momentum? When the small triggers break away from the large triggers, that space created. Odds favorable momentum has nothing to do with a top or bottom. And this is where messages get a little mixed up, right? What's a strong top or bottom? A strong top or bottom is a termination condition that creates a full reversal. So for a 50-50 trade, when you come from a good top or bottom, it increases the likelihood of success because the market has reacted to a key area. It's created a full reversal, and then it's provided you odds favorable momentum. Does that make sense? So the market has, let's find a good top or bottom real quick. The market has come from a termination condition. It's created a full reversal that provided you odds favorable momentum. Does that make sense? There's a path. But why is it only a medium probability trade? Man, that's a great question. Because this area hasn't broken, Jay Solar. Because 44.1750 has the potential to break, but it's not a clear path. Does that make sense? The smalls are through, the large are not. This area is not broken yet. And how could I possibly call it a high probability trend trade if I don't have the advantage of a clear path? That's why the 50-50 isn't a high probability trend trade. But guys, that's why the 50-50 is the first trade that you'll probably take outside of high probability, because you can create a set of rules that gives you the highest chance of success. And I'm going to go back to this very simple plan, guys, the KISS plan, the Keep It Simple Sunshine plan. Don't fight direction or triggers, right? Guys, your first trade in the management that we just talked about, your initial stop outside of the window of opportunity, 2 ticks above or below the reversal bar. First contract, 100s, go break even. Second contract's $200 profit, call it a day, wait for the next one. And then, Jay, you can take it into that 50-50. 50-50 when one area is not broken. What does that mean? It means that I don't have a clear path. I'll never have a clear path if the area isn't broken. I can't. I don't want to give that advantage away. So I have to have odds favorable momentum on the 13-2 to give me that best chance of success. I want strong triggers on the 5-1 to give me that best chance of success. I want no divergence on the 5-1 to give me that best chance of success. And I want it coming from a good top or bottom, from that termination that creates a full reversal, because it lets me know that the market has reached a key area and reversed from it. And then I'll enter at the area, the same rules that get me in the high probability trend trade. And if divergence prints, there's absolutely no trade for me. And because it's medium probability, I have to manage it differently. My initial stop is still outside the window of opportunity, but I'm making sure that it's a small window of opportunity. Then above the reversal bar, if divergence prints, if I get a divergence on a 50-50 trade, guys, I exit the trade because I've lost momentum. And if I'm losing momentum, well, now I've forfeited two advantages, right? It's okay to take an exit. We don't have to hope. We can see it happen. My first contract is going to be at the trouble spot. It might be a divergence low. It might be the fib that I'm hoping breaks. My second contract is at $200 profit. Does that help a little bit, Jay Solar? That's why it's medium probability, because you don't have the advantage of a clear path. Guys, this trading plan that I'm giving you here, this is 90% of my trading plan. And I want you to see something. What I was doing right as class was starting, and I opened up the NASDAQ chart, so my entry is a couple ticks late. But I had odds favorable momentum, and I had no termination conditions. And guys, notice how both the small and the large are below that area of resistance. I have a clear path. I have all of my rules met for a high probability trend trade. I enter at the mid band inside of favorable large triggers. I wait for that reversal bar and my risk is reduced, right? My first profit target is hit. And now there's nothing to do except go break even and see if my second target gets hit. Guys, I have zero risk and I have money in the bank on this trade. This is where that trust comes in. This is where that faith comes in. Believing that this momentum will carry me to the next key area. Believing that these rules work more often than they don't, guys. Where's the next picture? Divergence prints, right? But I'm not worried about it because my 13.2 says go, because my rules say stay break even. And man, it almost got me. And a lot of you guys are going to jump ship because you're going to watch that 5-1 and you're going to forget all about what your large chart says. Did I not show the final result? I didn't take a picture of the final result because I was teaching class. You guys want to see what happened? Let me open up my NASDAQ chart. I'll show you exactly what happened on that trade. Mark, sounds good. Iceman, it may be you, but I moved it closer. Guys, I use momentum and Fibonacci. I have to scroll back a bit. The NASDAQ moves a lot. Here's that trade. There's my entry. I went break even after my first target, and I took profits at a Fibonacci area, guys. Why did I take this trade? I took this trade because I have faith in it. Because I know that it works more than it doesn't. Because, guys, I have 220 pictures of the perfect entry, right? 200 pictures, 220 pictures of the perfect entry. And I'm a realist. I know that some of them are going to lose. Guys, look at this. Odds favorable momentum. No termination conditions. Area for entry inside of favorable large triggers. And I took a little bit of a butt kicking on the perfect trade. This is that 20% that doesn't work, guys. You have to be okay with this. When you develop trust, it's easier to take the next trade. Look at this one here. It gave away the advantage of momentum, didn't it? And it didn't work out. It didn't have an entry in an area inside of favorable large triggers. And it didn't work out. Guys, develop trust. Take these pictures. Look at it. Take that plan and make it yours. Take that plan and make it your plan. Take that plan and study it and do everything you can to disprove it. And bring those pictures to class and show them to me. And say, hey, Mark, I think you're full of beans. There's no way that a termination condition could ever create a bounce big enough to take me out of the market. Let's see if it did. 10:15, right? At 10:15, You traded directly into a termination condition. You didn't have areas inside of favorable large triggers, and look how it overruns everything, guys. The market still goes up, but why take that loser? Price reaches resistance. Absolutely no trigger lines have broken through. No reason to take a trade into an area with the potential to hold. Price reaches one-to-ones. Absolutely no trigger lines break through. Guys, there's no reason to take that trade into an area that may stop the market. Divergence prints on a 50-50. There's no reason to hope that that trade works because you know that you're giving away advantages. Your job is to learn the advantages, to trust the advantages, to take the trades, to practice them, to annotate the charts, to put them on there. Bring them to the room. Let's talk about them every day, guys. I just gave you the keys to the kingdom. I just gave you the rules, the looks, everything you need for the highest probability trend trade. For a trade that typically wins more than it loses. For a trade that can be used every day on every market on any time frame to bring you success. Your job's to study it and trust it. Guys, don't change the rules. When you annotate your chart, don't say, well, the fib turned blue. That has nothing to do with your rules. Don't say, well, 2 divergences on my 5-1, I decided to exit. It has nothing to do with your rules. Keep it simple, keep it focused. Guys, make money on the easiest way before you try to expand. Everything you need is here. Everything that you need is at your fingertips. Just stay focused. I'm going to take 5 minutes. I'm going to go rest my lungs for a second. I'm going to stretch my legs. Guys, if you have a picture of a trade, post it in the room. If you have a question, post it in the room. I'll be back in 5 minutes. I'm going to start scrolling back. And when I scroll back, I'm going to look at all the trades that you guys... Your question remains, Jay Solar. My answer will remain as well. Let me give you the short run since I did a huge dissertation on it. When it's a 50-50, you don't have a clear path. Let me get the supporting picture as well. Jay Solar, when you have a 50-50, when the smalls are through, even with odds favorable momentum, you don't have a clear path. The area is not broken. And if the area is not broken, I can't in good faith or conscience tell you that it's a high probability trend trade. Does that make sense? The only way for it to be high probability is if you have the advantage of momentum, the advantage of a clear path, and the advantage of an entry inside of favorable large triggers. That's the only way, the only circumstance I will ever refer to a trade. There is no we, Jay Solar. Are your rules met? 50-50s don't create reversals. The market reversed. The 50-50 didn't create it, Jay. This is a 50-50 that didn't work, right? From a bad top. So why don't you say that this clear path created a reversal, right? It didn't. The market just reversed. We have no control over it. You have a 50-50. The smalls are above, the large are not, right? And you definitely need more than one, but this is just the look. And you say we can enter on a tail, right? Jay Solar, what are your rules for a 50-50? There is no we. I don't give you guys a trading plan. You have to decide. My rules for a 50-50 say that I need odds favorable momentum. I have to have strong triggers, no divergence from a good top or bottom. This is my requirements and my personal trading plan to take a 50-50, and I don't deviate from this plan because it provides the highest chance of success. So Jay Solar, you did not have a whoops, I just closed you out. Sorry about that. You didn't have a termination condition that created a full reversal. The market just reversed. That's okay. That happens sometimes, right? It did the same thing up here. So this becomes a 50-50 trade, not from a good top or bottom. If your rules say you'll take it without divergence, let's go back to the S&P. If your rules say without divergence and with an area inside of favorable large triggers, I'll take that trade. Then J Solar, that was your trade. But it has nothing to do with the tail. It has everything to do with the area inside, the strong triggers, the small window of opportunity, and the no divergence. Me personally, I like a termination condition that creates a full reversal because I feel it provides me an advantage. It doesn't mean that sometimes these won't work, but it means I'm not willing to take it because that advantage goes away in my eyes. Does that make sense? A lot of you guys probably took this one, tried to take this one, waited for that 1-to-1 inside of favorable large triggers and it didn't get you. Maybe it went without you. But J Solar, it's a beautiful trade, but it's a medium probability trade and it needs to be managed assertively. This one never gave an opportunity for management. Does that make sense, Jay? Joel, make sense to you? Awesome. And man, it's hard to watch the market go without you. It really is. It's hard to watch the market go without you and feel like you shouldn't change your plan, right? But when a termination creates a full reversal, it's kind of a better opportunity. When it's a bad bottom, it goes down a little bit. It doesn't mean that it won't work. It just means that you're losing that advantage a little bit. That was a beautiful look, Jay. It really was. Yeah. And that's cool, right? You don't have to take all of them. No worries. I think it's a great question. But that's why I post this. Guys, this is the highest probability for a medium probability, if that makes sense. When these conditions are met, the 50-50 has a better shot at success, guys. When you start giving away one of these advantages, I don't have an exact number, I really don't, but I know that it goes down. And I know that a good top or bottom increases the likelihood. So if I'm a brand new user, and remember that these are gauged for people that are brand new, that want that highest chance of success. Eventually, Jay, you're probably going to change your approach and maybe eliminate that good top or bottom. I'm not going to lie, I would have taken this one all day long. But as a brand new user, it's okay to miss it until you get that repetition. Right, guys, there's a million trades to take. There's momentum trades, there's HVA trades, there's continuation trades, there's edge trades, there's counter trend trades. There's a million trades to take. But there's no reason to start chasing everything until you're successful with one thing. That's the point that I'm trying to get across. Simplicity makes your life easy, guys. You don't want to think about 5 different trades when you're trying to catch one trade. You don't want to think about 20 different rules when 3 works. No, don't ever use that word bottom. Or don't ever use that word never, Jay. Why would you say never? 50-50 trades will come from all over the place. There's a 50-50 trade. There's a 50-50 trade. 50-50 trade. There's a 50-50 trade. That was a 50-50 trade. 50-50 trades will come from all over the place. Right? When do they have the highest chance of success? When they come from a termination that creates a full reversal. It doesn't matter if it's coming from a strong top or bottom. It matters. Your likelihood of success goes up when it comes from a strong top or bottom. So a 50-50 can come from anywhere, right? That's a 50-50. It ultimately breaks. That's a 50-50. It ultimately breaks, not from a good bottom. That's a 50-50. This one loses. This one wins. This one loses. So all I'm saying is a 50-50 has nothing to do with the top or bottom, right? And I think that you're melding these thoughts together. So let me see if I can help. I like it. What's a 50-50? A 50-50 is nothing more. It has nothing to do with the top. It has nothing to do with the bottom. It has nothing to do with momentum. A 50-50 means that 50% of your trigger lines are above the area you're waiting to break. 50% are below. That's the name, 50-50, right? Jay, are we good with that? Doesn't matter where it comes from. 50-50 is nothing more than a look. So a 50-50 means that the area has the potential to break. So what's the next step in that? Is determining where does that 50-50 come from? Is it coming from a termination that created a full reversal? Let me find it. Is the 50-50 coming from a termination that creates a full reversal? If it is, it has a better chance of success. If it isn't, it has less chance. That's exactly what a 50, isn't that what I just said? Smalls are through, large or not, that's it. 50-50. Pretty cool, right? Simplicity. So the 50-50 means that the area has the potential to break, but it hasn't broken. It's not a clear path. So Jay Solar, you're absolutely correct. That's your 50-50 look. It's perfect. Smalls are through, large or not, the area has the potential to break. When an area has that potential to break, this is where I start looking for the perfect conditions for entry, because I have already forfeited the advantage of a clear path. So for me, it's imperative that I don't give up the advantage of momentum, that I have a small window of opportunity. This is a great 50-50 look, and it has nothing to do with coming from a strong top or bottom. Does that make sense? Let me give you this picture. Jay Solar, this is a perfectly acceptable 50-50. I would take this look all day long with no regards to whether or not it's a strong top or bottom. However, adding a strong top or bottom to this look, letting it come from a strong top or bottom with this look, gives it just a little more edge, right? This is a 50-50 from a bad bottom, not a termination that creates a full reversal. But because of the strong triggers, because of the small window, no worries. Yeah, feel free to send me an email. You're taking an awful lot. Start with the idea of a 50-50. And then let's create, when I have a 50-50 look, this is my best chances for success. I can omit one of those. That's fine. That's still a really good look. But the addition of this makes it an even better look. So your plan may change, right? Jay Solar, steal this. I mean, seriously, steal this and go back and study it and find it and see how it works. And there you go. Ron says most of the time he can't even see the top or bottom when he gets in. Momentum and room to the target is more important. I agree. But this plan is designed for brand new people. This plan is designed for people with no experience who are just learning to read their charts. So this plan takes that highest possible so that you can be a little successful in the beginning and feel good about it, right? Which one? This right here or this right here? Jay, they're both 50-50s. And let me show you why. Cool. Absolutely, it's a 50-50. Why is it a 50-50? 50% of your triggers have made it through the area. 50% have not. Do you see how I don't need anything else to determine that it's a 50-50? But you just said it's not considered a 50-50. What do you consider it? So watch this. That's a 50-50 look. I think I just figured this out. Not a good bottom. It's not a term that creates a full reversal. It is a bottom. It's not a strong bottom, right? Because it's not a termination that creates a full reversal. This is a 50-50 as well on this fib right here. But it's not coming from a good top or bottom. Did that clear it up? 50-50 is nothing more. Yeah, this would be considered a weak bottom. Has nothing to do with 50-50 though. I think this is where the confusion comes in. You think that a 50-50 is dependent on a strong bottom or not. I want you to separate the two ideas, and I think that'll help. A 50-50 is just an observation of the trigger lines. That's all it is. And then on that same note, let me go to my pictures real quick. A strong top or bottom has nothing to do with anything other than whether or not a termination condition creates a full reversal. They're completely separate of one another. And I think what you're doing is you're trying to use 50-50, and I may be wrong here, is you're trying to use 50-50 as your chances of success rather than the look of the triggers. Does that make sense? Did I just come in on that one? You believe that 50-50 is a reflection of the potential success of the trade, but it's not. It's just an observation of where the trigger lines are. And then you make that next observation after you recognize that the market's in a 50-50 position. You can ask yourself, is that 50-50 position happening after a strong top or bottom? And if it is, it creates the likelihood of success. Finman, did it bounce right off of the fib? Or did it overrun? Did the small triggers smash through? So let's go back to the pictures again. Guys, I love these lessons. That's a 50-50. What's a termination condition, Finman? It's when price reaches an area. Price reaches an area is the first requirement. And then the triggers don't break. Price reached the area, didn't it? But the triggers broke. The small triggers broke. The price did bounce, absolutely. And this is still a bottom. But it's not a termination condition, guys. A termination condition means that price reached an area and the trigger lines didn't break. A termination condition means from a high, price reached the area, the triggers didn't break. Price reaches the area, the triggers don't break. Over and over. Write it down. Say it in your head. Price reaches the area, the triggers don't break. So Jay Solar, here's a good look. Here's a strong bottom, right? Price reaches the area, the triggers don't break. It creates a scenario where the smalls break through resistance and the large do not. Now you have a 50-50 after a good bottom. Does that make sense? Price reaches the area, triggers don't break, creates a full reversal. This is a strong bottom. This strong bottom creates a 50-50 up here. All this is where's it coming from, right? A 50-50 happens after a strong bottom. It has a better chance of winning. This is a strong bottom. This is a 50-50. It has a better chance of winning. And on that same note, this is not a strong bottom. The trigger lines broke through the area. This is a 50-50. It's less likely to win because it doesn't come from a strong bottom. Does that make sense, everybody? Finman? Awesome. That's it. Triggers don't break means that the small triggers don't break through it. The large triggers don't break through it. Guys, this is textbook right here. Price reaches and all of your trigger lines remain above from a low. Price reaches and all of your trigger lines remain below at a high. That's a termination condition. A termination condition only becomes a strong top or bottom. Right now, it's just a termination condition. The only way it can be a strong top or bottom is if it creates a full reversal. Does that help a little bit? Guys, I love it. I love this feedback. I love this interaction. This is what makes this class so amazing. So how do I learn about strong tops or bottoms? I'm going to go back and study it, right? It's great to recognize, right? There's a 50-50. Divergence prints and it pushes way beyond the area. But watch this, guys. Man, thank you, Jay, for that question. Let's do this. Let's create pictures of strong tops and bottoms. Let's look for terminations that create a full reversal. And I don't have one here, right? Not yet. There's a termination condition. Price reaches resistance. Let's go through the process of it. You ready? The market's moving. It's coming up to resistance. Price reached resistance. All of the trigger lines remain below. I know that it's a termination condition, but it's not a strong top yet. How come? Because I haven't had a full reversal. Now it's a strong top. Does that make sense? We'll do it on this one as well. The market is trending down. Price reaches support. No trigger lines break through. It's a termination condition. I'm not going short. Price reaches support. No trigger lines break through. It's a termination condition. I'm not going short. It's still a termination condition. Price exceeds a little bit, but the trigger lines haven't broken. It's just a termination condition. Guys, give me a Y if you're with me on this one as we talk about strong tops and bottoms. This is a termination condition. It means that I'm not going short into this area. That's all that it means. This termination condition is still a termination, hasn't changed yet. Now this termination condition creates a full reversal. This full reversal gives me odds favorable momentum. Do you see how the small triggers are above and the large triggers are below? That's a 50-50 look, guys. That happens independently of this termination condition. But because it's a 50-50 that happens after a termination condition, should it give me the perfect entry, it's got a better chance of winning than one that doesn't. I love these lessons. And there it goes. So what are the requirements? Guys, this is a termination condition. Large triggers never came up. Yeah. So this isn't a strong top. That's just a termination condition that continued the trend. But here, that termination condition, the large go from green to red. It creates a full reversal. That can be classified as a strong top. This is a reversal in the market, right? Does everybody see this one? This is not a termination condition. Price didn't reach the area. Therefore, this is just a pivot. Just because the market reverses doesn't mean that it's a termination condition. It has to reach an area and the triggers have to remain above or below. So this is just a pivot. Guys, give me a Y if you're with me. This is just where the market went from up to down and it didn't happen at a key area, just a pivot. So would this be a strong top or would this be a weak top? It would be weak, right? The market does reverse, doesn't it? Large do go from green to red. I do get odds favorable momentum, but it's not considered a strong top because it's not coming from a termination condition. And look, there's a 50-50 and it fails miserably. See how that works? I recognize the 50-50, so I ask myself, where's it coming from? Well, it's coming from a weak top. The likelihood of this one working goes down dramatically. And there goes the market the other direction. I think this may be a picture that we need for the class. But you see how you can scroll back? You don't even have to take trades to get smarter. Just a pivot because it is not a termination condition. Market reversed. Just a pivot. The market went from up to down. That's all it is. Can't be a strong top because the rules aren't met for strong top. And then this is a 50-50. That's all it does. It just references triggers. Independent of one another. But what I can say about a 50-50 from a bad top is when a 50-50 happens and it is from a bad top, the likelihood of success decreases versus a strong top. This is how rules get built. So guys, what we've done and what I've done in my own personal trading is I've gone back and I've studied 50-50 trades. And what I can say, my first conclusion on 50-50 trades, guys, was that when I give up that clear path, these are the conditions that must be true to give me the highest chance of success, okay? And this is where it started for me. This was my 50-50 rules, and it was only this. No divergence, strong triggers, and a small windows. But then I began to study more. And when I began to study more, what I realized is that when a 50-50 comes from a bad top, it's less likely to work. When a 50-50 comes from a weak bottom, it's less likely to work. So what I did is I took my plan that said on a 50-50 trade, watch this. This was my original. My original plan said that I needed odds favorable, strong triggers, no divergence, and I would take the trade. But ultimately, I did more study, and I refined my trade, my plan, and I said, wow, the likelihood goes up dramatically from a good top or bottom. So I incorporated it into the plan because it increased the chances of winning, which is why this is put into your simple plan for consistency. And that's the path, guys. You would have to, if you were brand new and you had something, you would have to go back and you would have to research 500 of these and see what the outcome was. I've already done it for you. You would have to research 50-50 trades and what the best potential entry is on it. I've already done it for you. So guys, your path has already been laid out before you, right? There's that termination condition. Guys, that 50-50 with divergence didn't work. And look what's happening now. Price reaches that divergence high. The trigger lines haven't broken through. Even your smalls are on the wrong side. There's no long trades to be had here. There's no opinions to make. I don't have odds favorable momentum, and I don't have a clear path. 2/3 of what it takes to get me into a trade are not happening right now. All I have to do is sit on my hands and wait for it to happen. Guys, this was the best first hour ever. It lasted 2 hours. Great job. Great questions. And for those of you that asked them, thank you for having the courage to put them out there. I'm going to take a break for real this time. I've got to get a drink of water. Guys, stand up, stretch your legs, put your hands over your head, take some deep breaths, right? Relax for a second. Stop staring at those darn charts. I'll be back in 5 minutes, and we're going to go into this last hour. We're going to look at everything that you guys posted. We're going to keep answering these questions, and we're going to get you where you want to be. And guys, if you're brand new with me, if you're one of my demos, this is what we do every day. Nothing is off limits. No questions are off limits. Get them in the room and let's seek clarity every time. And I don't care how many times I answer the same question. My job is to make sure you understand what you're looking at. And if it gets to the point, right, where you're just like, man, Mark, I just have a personal hang up of taking up too much of your time, my email always works. If you have a question about momentum or terminations or strong tops or bottoms and you feel like you don't want to take up too much classroom, that doesn't mean that you don't get your answer, guys. Email me. I'll take care of you, I promise. I'll be back in 5 minutes. Mic silence for just a minute, guys. All right, guys, short break. I'm excited to get back. Termination condition. Is it a strong top? Yeah, guys, is it considered a strong top yet? What do you think? It's a termination. The background's red. Can I call this a strong top yet, guys? Not yet. How come? Because there wasn't a full reversal, right? So now it's just a termination condition. It's saying, hey, Mark, don't go long, but it's not a termination condition. So guys, I'm going to scroll up to the top. I want you to see this. This is how I get to your pictures, to your posts. So I've got like 38 acres of stuff to scroll back and look at. So what we're going to do is I'm going to start clicking on stuff. If I miss a question, if I miss a post, please do me a favor. Let me know. Whenever you get in a hurry for a trade, pray, wait, trust. I love it. Guys, that's trust. How do you develop trust? You develop trust by study, by looking at the rules, by understanding. All right, Jose. It's a 50-50 trade, right? Odds favorable momentum. The smalls are above, the large are not. You do have a couple divergences, but you choose to take the trade. That's a lot of divergences, but you choose to take the trade because of the momentum, because of the area inside of favorable large triggers, and you hold on to this trade based on the momentum. And guys, do you notice that it's coming from a strong bottom? And it makes it to the next key Fibonacci area, and Jose gets paid at that next key Fibonacci area. Jose, absolutely beautiful trade. Great job. Guys, this is trust. This is trust in the 13-2, trust in the good bottom, trust in the momentum, trust in getting to that next key Fibonacci area based on the momentum, guys. Jose has trust. That's why he held the trade. No reason to trade. It's a bad top. It's directly into support. The triggers are up. No reason to take a short, right? And I'm going to come back and scroll to the bottom on this one. I want you guys to see this. And this is important. And Jose is good at this. What direction? New users, let's talk about this. The trend is down, right? Does everybody see it? The trend is down, but the large triggers are up. I don't have odds favorable momentum. So rule number one is broken. There is no momentum. Price reached an area of support. Absolutely no trigger lines broke through. Rule number two is broken. No advantage of a clear path. And then there's the result, guys. And Jose, I'm sorry you lost that one. But you recognize after the fact that there's no reason to trade. Guys, you're going to do this from time to time. You're going to take trades that you shouldn't take. Post them in the room. Let's talk about them. Let's create lessons for everybody. But this one lacked the advantage of momentum. It lacked the advantage of a clear path, and ultimately the market went up. Let's see what we have. 50-50 trade from a bad top, right? It's been identified. It's a 50-50. It's a bad top. The smalls are broken through, the large are not. Guys, Jose's given us every lesson that we talked about, right? 50-50 references the trigger lines, not the odds of success. When I see a 50-50 look, I ask myself, where's it coming from? It's coming from a bad top. The likelihood of success goes down. Divergence prints, the likelihood of success goes down. So that's 2 strikes on a 50-50. Jose takes a beautiful entry in an area inside of favorable large triggers. He takes quick profits, and he gets to break even because he knows that it's a medium probability trade. Jose, beautiful execution, accepting the risks. Beautiful entries make manageable trades. And you're able to come out of this one with money, right? All charts agree. Every chart says down, but there are problems. Great entries create manageable trades. Jose, I don't think you could have done that one better, my friend. Nice job. Simple, right? Either your rules are met or they're not. Either the advantages are present or they're not. Got one from Ron. I bet I know what it looks like. It looks like odds favorable momentum and a clear path on the 13-2. Ron doesn't wait. Ron doesn't wait for a pullback. Ron takes that same look on a 5-1, jumps in, jumps out. Makes his money. Easy peasy, lemon squeezy. Base hits all day long. Gary. Not weak triggers, bad bottom, right? Bad bottom, but it's a 50-50 look. It's smalls above, it's large below. It's no divergence. It's a pullback to the midband. It's a 50-50 trade. Does everybody see this? Why is it a 50-50? Because the smalls are through and the large are not. So he asks himself, where did it come from? It comes from a bad bottom, right? And you say, what's going on here? There's no divergence. There's strong triggers. There's a small window of opportunity. Some of you, this fits. His checklist says, take that trade. But he stepped away from the computer, so he went back to annotate it. But his checklist says, take that trade. Guys, you're going to have different looks. You're going to have different rules. They have to be yours. Make them yours. Let them be unique to you. Don't worry about what anyone else is doing. Worry about what you're doing. And then ask for help to make sure you're doing it well. Jose. Jose says 50-50, no divergence. I'm in. It didn't catch his entry, so he said, I still have all the advantages. I'm jumping in. I'm making money. Jose, looks like you're off to a great morning. Same trade, different look. All right, Vin, you gave me a chart. I love it. So you're saying you feel this is idle at entry, and I'm not exactly sure what that means, to be idle at entry. Let's go through it. Let's look at your chart. And guys, this is why we annotate. This is why talking to me about what you see. Circles are good. So let's go through everything that I see. Oh, ideal. Yeah, I think you're right. Thanks, Ron. I'm thinking idle. So then let's go through this because you gave me a great look here. And you're absolutely right. That's not ideal. You do have momentum, absolutely. And you do have no termination conditions, without a doubt. I think rules 1 and 2 were met beautifully right now. But what you never got was a pullback to an area inside of favorable large triggers, that best chance of success. But if you're patient just a little bit, you can see how it starts to come to fruition a little bit later. Sometimes just because it's not happening in the moment when you want to take a trade doesn't mean that it's not going to happen. So then this is a great picture. And you're already identifying odds favorable momentum. You're already identifying no termination conditions. And I think it's pretty awesome. You're already identifying that that's not your best chance of success. That's not the pullback to the area inside of favorable large triggers. So you go from that basic understanding of the rules and you accelerate it into a more refined look, waiting for all 3 rules to be met, insisting on it. Then, great job. Thank you for sharing. It's difficult and a little nerve-wracking to share on the first day, but I think you read it perfectly. And I think you made a great decision based on not having those entries. Gary, identifying termination conditions. Great job. Guys, take pictures. When the rules aren't met, take pictures. Reinforce that you're going to follow those rules. David, let's see what you did, my friend. David says 50-50 trade, right? No divergence, pulls back. And you hold through all the nonsense on the 50-50. It's a great entry. David, can we talk management? And guys, you can do whatever you want. I'm going to talk new user management here. I'm going to talk need feedback here. Is this a good bottom on the 13-2? It's not, because it's not a termination condition that none of the trigger lines have broken through, right? This is a 50-50 look. Your smalls made it through. Your price made it through. This is a pivot, but it's not a termination condition. So this is one of those 50-50 trades, right, David? 50% are through, 50% are not. This area has the potential to break, but it hasn't broken. I'm going to try and use all of the language here. You've got strong triggers on your 5-1. You've got no divergence on your 5-1. You have a tiny little window of opportunity. You've got one spot where that market's likely to continue. And do you see how it gives you a reversal bar, David? This is a 50-50 trade. If your initial stop is outside of the window of opportunity, your initial stop's about right here. When that reversal bar prints, you have 2 ticks of risk on this trade. Does that make sense? Reversal bar prints, 2 ticks above, you're literally 2 to 3 ticks of risk. So what happens after? The reality is you should have been stopped out of this trade for a small loss. So now we have 50-50 with the potential to break. And you stayed in. It comes all the way up to 1-to-1s. Your trend has changed on your smaller chart, but you're still holding on. Divergence prints on your smaller chart, but you're still holding on. That market goes all the way up 17, 18, 19 ticks beyond your entry, and you're still holding on. Your 13-2, small triggers are above the large, and you're still holding on, right? It feels like a lot of, holy crap, I hope this thing goes back down. And you're able to make 5 ticks. After all of this, where on earth was your stop? That would be I would love to see what sort of stop strategy you have. There's got to be a point where you say, I'm not willing to risk. That's $1,200 of risk on an area that hasn't even broken, on an area that is 12 ticks away from your entry. Does that make sense? Traders love to talk about risk versus reward. That is about one of the most skewed. And I know, David, you're simulating, right? You're like, it's just simulator. Let's see what happens. What you're doing is you're training your brain to rely on luck. You're training your brain to abandon all logic, everything that your indicators say, and you're relying on a 4-letter word to make your trades work. You're relying on hope to make them work. I love that you made 5 ticks per contract on this. I try not to form opinions, but I can tell you in my personal trading, I would never risk $1,200 on an area that hasn't even broken. It's easy on simulator. You got brass balls on simulator. Pardon my French. This is setting up for real world failure. This is setting up for failure when you go live for the first time and you can't figure out how you blew out on the first day because it works so great on pretend money. And Gary sharing his 50-50 checklist. Guys, steal that. He's got a good one. All right, Paul, let's see what you did. Paul says it's a 50-50, right? 2 divergences print on a 50-50. Paul's incorporating, if 2 divergences isn't enough to keep you out, Paul says, you know what, I'll even let a different chart confirm or deny. He never gets a signal, no trade. Man, Paul, I really feel like you didn't even need a chart to realize that was a bad idea. 50-50 from a bad bottom, 2 divergences, right? You have a laundry list of things going wrong on that trade. Great job not taking it. Joel, how many term trades do you need to learn it's not in your plan? You know what, Joel? I don't know. I'm up to about 8,000. Guys, this was my thing over and over. Trading in determination conditions. I was so good at it. I traded in determination conditions every chance I got. Oh, that was crude oil inventories. They're down. Did crude go crazy at news? I was talking about tops and bottoms at news. Guys, you're going to make mistakes. You're going to trade into termination conditions. You're going to do things that don't fit your plan, right? Termination condition. Just not trading. No reason to. Let it sort itself out. Nice picture, Joel. All right, Paul. Let's see what we got. Paul, your 13-2 has odds favorable coming from 3 divergences at a pivot stop out. I would say that's a good bottom. There's a divergence, though. It's a 50-50 with divergence. Small window of opportunity. How'd that one turn out? Maybe there's an after picture. $50-50, divergence prints. It doesn't win, right? 2 divergences on a 50-50 and you get run over. Guys, I can't stress this enough. Why hope? If you've already forfeited a clear path, why on earth are you giving up momentum as well? Cam, you've traded on hope. It very rarely works out. You and me both, my friend. Guys, the worst days I ever have trading. You want to know what my worst days are? Historically, I'm going back. When I fight the trend and believe that my desires can change it, I typically lose. When I fight momentum, believing that my hopes and prayers will make it suddenly go the other direction despite what my indicators are telling me, I lose. When I fight termination conditions, when I hope that that thing will magically break because I want the market to go up or down, I lose. I'm telling you guys. And when I fight divergence on 50-50s, I lose way more than I win. So, guys, how do I know this? How do I know that these are my problems? Because I've had them. Guys, these are my problems. These are the things that I have written on a giant piece of paper in front of me that say, don't do them, you lose more than you win. Have you guys done that yet? Have you just sat down and say, what's my biggest problem? My biggest problem is fighting momentum. My biggest problem is fighting trend. My biggest problem is X, Y, Z. And then saying, let me come up with a plan. I would agree, David. Everybody can be fixed, though. My opinion kills me. My opinion about the trend, the momentum, the termination conditions, Debbie, absolutely. So this is when you develop a plan. You develop a plan that aggressively goes after opinionless trading, mechanical trading, right? Do it today. Reflect on what the beep you're doing. Guys, the more charts you post, right? So Cam, as you take a step back and try to simplify, start posting those trades, right? I haven't seen you in here a while. And that's a normal part of it, guys. You get excited. And you're like, I'm so good at this. I don't need Mark anymore. And then you go and you screw everything up. And it almost feels like a walk of shame to come back to class. I'm telling you guys, I've blown out accounts and done stuff wrong and didn't ask for help. I've done it. I'm here so you don't have to. I've gone from live to simulator probably 20 times in my life. Because I have a plan that makes money on simulator. I have confidence on simulator. And then when it goes live, something changes. I abandon everything that was working because now suddenly it's live. I see that a lot. Has anyone ever done that? I'm going to tell a story. I shared this story earlier today, and I'm going to share it in classroom. And I'm not going to say who, and I'm not going to say when, right? So I had a person. It could have been a man. It could have been a woman. It might have been a dog that trades the markets. I don't know. But that person got an Apex account and said, I'm going to fund this thing fast. And they said, this is how I'm going to do it. I'm going to take a 10 lot, and I'm only going to take this trade. I'm only going to take a high probability trend trade that comes from a termination condition on the 13.2. And that person funded multiple accounts almost instantly with this one trade. And then once the accounts were funded, they abandoned everything that funded the account. They started adding the risky trades back in. They started adding multiple divergence 50-50s back in. They started trading against the trend. They started taking edges. They started taking entries outside of favorable large triggers, and they lost their funded accounts. Guys, this is normal. It's totally normal because you stop thinking about what got you where you are and you start thinking about where you're going, right? Everybody does it. You start worrying about the money. You stop worrying about the process. And that's not abnormal. Everybody does it. I forgot where I was. Ron C. So guys, all that to be said, your opinion is going to cost you a lot of money, and dance with the one that brung you. Odds favorable, no terminations. Get in, get out, money, 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 fast, not greedy. Guys, this is what got Ron. This is the girl that brought him to the dance. He's been dancing the same dance since I've known him. If I look at 100 pictures of Ron's, they all look like this, except that one. Every one of them looks the same. Every one of them has the same conditions. Every one of them has odds favorable momentum. Every one of them has a clear path. And every one of them has an entry and exit that doesn't revolve around greed. It revolves around getting paid rapidly so that he can hurry up and wait for the next entry, for the next set of rules to be met. Check it out. This trade looks exactly like this trade, doesn't it? Consistency in what you're doing, guys. This is a proven plan. This is a plan that pays dividends. This is a plan that has him eating chili dogs on the beach by noon every day. There's no reason to deviate. Gary says he didn't take this one. It was such a good miss that they won't even give you the picture. Joel, what did you do? Let's see. Is that a good top? Are you asking or are you telling me, Joel? Is it a good top, guys? Yes or no? What do you think? Is it a termination condition? That's the first one, right? Price reaches resistance. Absolutely no trigger lines break through. Did that termination create a full reversal? Absolutely it did. Joel, that is a good top. Is this a good top? No. Is that a good top? No. But yeah, that is rockstar top. Great picture, Joel. Guys, take pictures of the concepts that you want to be good at so that you can be great at them, right? Bobby T. Bobby says 50-50. Is divergence a key? You're darn right it is. Why is divergence a key? Thank you for asking, Bobby. Let me go to the picture that I took, that I made. Man, I sure do like pictures. So I took the clinical definition straight from the resource materials, and I kind of highlighted a cyan divergence low line, a magenta divergence high line. Bobby, absolutely. These are areas that may reverse the market. And then I went through a little bit, guys. This isn't out of a textbook. This is out of my brain. Why are these areas on the list? Because anytime the market has a divergence low or high, that represents a specific point in the market where not only could the in-control force not go any more in the direction, but the other side, the opposing side, stole their momentum. So Bobby, this divergence line shows where the buyers could no longer push it up, right? And not only could they not push it up, they lost momentum. The market comes down, that pivot is formed, and when the market reaches that key area again, man, there is a truckload of sellers going, we already told you no once. Do we really have to tell you again? And when you get that pivot stop out, look at that. Here they said no more. So right here it becomes a line in the sand. And divergence prints, right? And the buyers go, ha ha, we got this. And the sellers, go to hell. We already told you once. It's a great read, right? It's a 50-50 trade with divergence. You chose not to take it. And it kept you out of trouble. Great read, great picture. Guys, this is how you get great. Take pictures over and over and over. Everything you see. Not a good bottom, right? It's a 50-50, just barely. Small triggers above the large triggers. Bobby, what's today's lesson on this one? Do you have any idea what I'm about to talk about? There is a severe lack of annotation on this chart. But you're prepared. I love it. So let's go through it. So first of all, everybody give me a Y if you see it. The small triggers are above support. The large triggers are not, right? So everybody's comfortable. This is a 50-50 look. So let's ask ourselves, where's it coming from? And let's use our lessons, guys. Is this a strong bottom? Or is it a pivot from nowhere, like Cam said? It's not a good bottom. So we'll say bad bottom because it sounds funny, right? And it's a 50-50. I do have strong triggers. I do have an area inside of favorable large triggers. I have no divergence. I like the 50-50 look here, don't I? Do you notice that your trigger lines aren't trending one on top of the other, that there's separation between the two? I know they're not favorable large triggers, but Bobby, that's not even the challenge here. So I'm going to back everything up. And then I'm going to go to your picture once again, and I'm going to blow up one thing that, in my opinion, is such a key factor. It's a bad bottom, but it is at a divergence line, but it doesn't matter, right? You could say this is a bad top, but it is at a fib. If it's not a termination condition that creates a full reversal, it's not a great trade. But guys, there's this phenomenon that when price accelerates away from the large triggers, fast and furious, and it reaches a Fibonacci area, whether that Fibonacci area is support, resistance, mid-band, one-to-ones, if price pulls away from the synthetic triggers too fast and too far into a Fibonacci area, it typically snaps back to those triggers, guys. It's called the gap theory. So price accelerates all the way to this mid-band. The large triggers remain a full bar away. Price is likely to snap back and close that gap to the triggers, which means that if I go short before it does, I'm typically getting run over. Price accelerates even from a termination condition all the way to that Fibonacci resistance. The large triggers don't follow. It's likely to snap back and close that gap. Here it is again. I'm using that reversal bar marker. The large triggers are below. Price is likely to close that gap, to snap back. Here's a picture of it having happened. It closes that gap. Any shorts in here typically get slaughtered and slaughtered quick. So it's not a long trade. It's not a short trade. It's a, hey, don't do anything and let it sort itself out. You see this a lot from a bad top or from a bad bottom, and the market likes to continue. One more picture of that gap theory. Price accelerates away from those large triggers. The large triggers remain a full bar away from a bad bottom. It closed that gap, didn't it, Bobby? And it ran you right over on the way. So guys, the market repeats itself all the times. Patterns happen all the time. The gap theory keeps you out of this long. It keeps you safe. Rules are designed to keep you safe. And if you're uncomfortable with the gap theory, what do you need to do? Well, you need to go back And you need to open up your chart and scroll back and look for it happening, right? Price accelerates all the way into the... I wouldn't have taken the trade, Bobby, because it's a 50-50 from a bad bottom with the gap theory. My stop would have been in my pocket waiting for a higher probability trade. There it is again, right? Gap theory. Whoops. If it was not a gap, so where should the market not go? Great question. If it wasn't a gap theory, especially if it's a 50-50, I want that market to bounce right there, don't I? I want it to bounce at that area of support inside of favorable large triggers. I might give it 5 or 6 ticks below it. But there's so many things wrong with this. Because of these split triggers, I have to expect it to go back. So it's not a fair question. There's so many things wrong with this trade that it's hard for me. But I would say right where you put it, below those large triggers. Because I'm expecting it to close to the large triggers, right? It's from a bad bottom. It's probably going to continue. So it's not really a fair question. But you expected it to close to the gap? So you put it on the other side? You notice how there's nothing for it to bounce off of here, right? And it is a medium probability trade. And it is coming from a bad bottom. Yeah, after the trade. And guys, you'll do a lot of that after the trade study. But if it's already a 50-50 and it's already from a bad bottom, give it a couple ticks. It may go, right? It may go. But I don't know that I would risk 18 ticks on it. That's $360 a risk in less than optimal commission conditions. It's a great picture, Bobby. And there's a lot of great lessons in that one. So I appreciate the picture. Guys, there's a lesson in every picture that you post. There's not only a lesson for Bobby, there's a lesson for all of you guys, right? Those of you that didn't know about the gap theory, congratulations. Now you know about the gap theory. If you have more questions about it, ask, right? Ask about it. Let's see what we have. Gary has weak triggers on a 50-50, and his areas are starting to fall beyond. Gary, you got some craziness going on over here. You're running two different things. That's why it looks weird. Jason can fix that for you. And Bobby, I appreciate the question. This is a I'm not taking it trade. Nice job, Gary. Sometimes taking the pictures of the trades that you won't take because they don't fit the rules just reinforces the rules. Reinforces what you're looking for, why you're looking for it, right? Not the gap theory, Joel. It's a good effort, not the gap theory. It's a 50-50 trade. 50-50 trade coming from a termination that creates a full reversal. Why is it not the gap theory? I'm glad you asked. You guys ready for a refresher on the gap theory? Let me see if I can find my gap theory picture. Because in order for the gap theory to be true, Joel, those large triggers are on the other side of that reversal bar marker, right? Because the rule has a full bar before it reaches the triggers. This price at 39.8101 is the price at which this bar becomes a reversal bar. It was the price at which this bar became a reversal bar. So you're looking for those triggers to be beyond that point. So in your picture, and this is a great picture, right? Your reversal bar marker's all the way up here. You've already smacked into those large triggers and that bar hasn't even finished forming. Yeah, it's just a 50-50 trade. It's a good looking 50-50 trade. That's a 50-50 trade that I might take. Because there is no divergence and strong triggers in a tiny window of opportunity, and I wouldn't risk much more than that. It's a good look, Joel. It's a great picture. Thank you for that. And then Ron doing it again. Angry triggers make happy momentum. Base hit. Ron, I hope it doesn't bug you that I use you an example. But I'm going to do it again, guys. All right. There's one trade that relies on odds favorable momentum, no termination conditions. This trade is a base hit. That trade looks exactly like this trade that was a base hit. Looks exactly, whoops, like this trade going the other direction. Guys, do you see the consistency? Consistency is key, guys. Consistency is what gets you where you want to be. Consistency means that every time you take a trade, you trust that it has a better chance of winning than losing, that you trust in the advantages that are present. This class is designed 100% to help you establish that trust, guys, to give you the basic plan, to give you that skeletal outline of where success comes from. You're going to need to study it. You're going to need to look at it. You're going to need to be able to recognize when those rules are met. I'm here to help you every day of the week, guys. I'm here to help you. From your banker. I'm here to help you recognize those advantages, right? I'm here to help you recognize when you have odds favorable momentum, when you haven't reached a termination condition, and when that market pulls back to an area of support inside of favorable large triggers, do you trust this look enough to be in the market at 34.75? Do you trust this look enough to have your stop where the market shouldn't go? Do you trust this look enough to take it again, even if this one loses? And it takes a while to get to that point, guys. Do you notice how the tail hasn't formed? There is no tail yet. I'm not trading tails. I'm trading areas inside of favorable large triggers. If I go from the top of the triggers to the bottom of the triggers, the highest point of support to the lowest point of support. All right, then I'm going to give you kind of the most basic answer, and this is how it was described to me. You ready? Divergence either is or is not. It's like pregnant. You're either pregnant or you're not. 33% isn't any more powerful than 24%, which isn't any more powerful, and I can't find a divergence, right? Isn't any more powerful than 13 or 76 or 18. It's the calculations running behind the scenes, and it produces this number. All you need to know is that if this line forms and this line forms, then divergence was true. Then there was a loss of momentum at that pivot. You're going to see all day long the potential for divergence. You may watch the market run 50 points. This may have had the potential for divergence all the way up. But until it prints, no matter what the number is, until that line forms, it's nothing more than potential. Are you good with that? Not everybody can accept that. But that's really what it is. I don't worry about, there are no degrees of divergence. There's no degrees of fibs, in my opinion. It either is or it is not. So in order for this to become a tail cam, it would have to go back up, right? It would have to form the next up bar. That's the only way this tail's ever going to form. When it goes below the midpoint, it starts to form the tail. But the tail doesn't form until the bar closes up here and it becomes an up bar. When it tries, if it tries to push down and can't and finishes up top, that's when we get those tails. If it tries to go up and can't, finishes lower, that's when we get those tails. So if this is going to have a tail, this needs to be an up bar, not a reversal bar. Otherwise, it's just going to be a down bar. Does that make sense? Cool. But this is why we don't trade tails, because it may never be a tail. That's why we look for areas inside of favorable large triggers. And then, Paul, here's your repost since you were dropping off the kids. 12-year-old Mark hopes that wasn't a euphemism. 3 divergences in the same location. That is a termination condition, right? That was your 50-50 after the termination condition. It never gave you an opportunity. This is a 50-50 trade, right, Paul? Smalls above, large below. And you have 2 areas that have the potential to break but have not broken. Are you comfortable so far with that? No matter what happens down here, and absolutely, that's a termination condition. Creates that reversal. Gives you odds favorable. I have 2 areas. I have 69.89 as well as 69.86 that haven't broken. So I'm relying on momentum that's fizzling out a little bit to break 2 areas. So when I turn my attention to the 5-1, not only do I not have a clear path, now I have a loss of momentum, right? I still have an entry area, but I've lost momentum. I don't have a clear path. And then, guys, you're going to hate me, but I remember everything, so I remember the picture that went with it. So at the time of entry, not only did I lose momentum once, I lost momentum twice on a path that wasn't clear. And look what happens, guys. This is why no matter what the bottom is, it's a medium probability trade. It'll never be high probability because the path isn't broken. And then when you start giving away the advantages over here, bad things, man. Bad things. Does that make sense, Paul? So what has to happen, guys, I recognize patterns in people. If you're doing the same thing over and over, expecting different results, that's that cliche, ooh, that's insanity, but it's not. You have advantages. You know the advantages. You can read your chart. You can recognize them. You have to ask yourself, why am I willing to give up advantages if I'm doing this to make money? Why are you doing that? Is it the excitement? Is it the hope that it works? Guys, you all have to answer this question for yourself. I can't answer it for you because I've given up advantages. Which trade did you want to take, Philly? And I'm assuming this is a 5-1 chart. What market is this? I can't even see price bars. What am I looking at here? Help me out a little bit. Man, Philly, I promise I'll do everything in my power to get you to where you want to be. But I need to see what's happening on your large chart. I need to see what's happening on your small chart. And I need you to tell me which trade, because you have on this particular picture 1, 2, 3, 4, 5 arrows in 3 chat boxes, only 2 of which. And you say, I wanted to take the trade. Did you want to get in? Did you want to get in right here? Did you want to get in here? Maybe here? Were you looking for it here? Do you see how that's confusing for me? Man, I want to give you the best feedback possible. You wanted to get in at all of them. All right. That's fair. Why? So here's the question. Why? Why did you want to get in right here with large triggers up and small triggers down? Why did you want to get in right here with large triggers up and small triggers down? What made you want to get in here with the large triggers against you? And did you want to get in short or did you want to get in long? Do you see how that works? So Philly, what I want to see from you is I want you to say, hey, Mark, my large chart had odds favorable momentum. My large chart had nothing in the way. And this is the area inside of favorable large triggers where I wanted to enter the trade. If you're writing those rules, if you're following those rules. But the flip side is my rules don't have to be your rules. So if you wanted to enter here, tell me why. I had an English professor, and he aggravated the hell out of me in the beginning. Anytime you would write something, he would write on your paper in capital letters. So what? That's okay. But what made you want to get in there? And so what was the question that was asked of me as I was working on my English Lit degree. You wrote it on a piece of paper. Why? Why did you write it? Why did you want this entry? Did you want it because of the trend? Did you want it because of the momentum? And the cool thing is, Philly, is right now you're just kind of working on everything, right? You're like, man, I see so much. I'm trying to figure it out. I can keep you focused. Did you have odds favor? You know what? Let's do this checklist. Were you coming from a good top or bottom, right? But why? And this is the question. Why did you think it was a good entry? I'm not saying that it wasn't. It might have been an awesome entry, but I don't understand why you thought it was. So it's difficult for me to give you feedback on what you see and why you think it. But if you show me what's happening on your 13.2, and you said, Mark, because of the momentum on the 13.2 and everything set up, I see your synthetics are up strong. So let me make a different case for this one. Hey, Mark, because my synthetics were still up really strong, my 13.2 was in an uptrend, everything set up, and I noticed that divergence printed, and I noticed that everything's going up, and I really thought that there might have been an entry somewhere right here. To which I'll reply, hey, Philly, do you see how? No worries, I love it. So Philly, right here, you're like, man, everything on my large chart says up, right? And it probably did at this point. Everything's set up, and you're like, dude, this thing's going up. But your small chart had to work through some stuff. And what I can do is I can say, hey, Philly, check it out. When everything agrees again, that's going to be your lower risk, higher probability entry. Does that make sense? I'm not saying that you're wrong here. I'm just saying that based on the limited information, this is probably your better choice for going long. Was that the S&P? What time? What time did that happen? Let's go look at it together. Do you remember when on the S&P that happened? Let's see if I can. There it is, right there. Awesome. So 1551. So check it out. Oh my gosh. You ready for the first part of it? What a great read. So Philly, you had odds favorable momentum. And you had one of those 50-50 looks. Do you see it? Philly, what a great read. What a perfect read. You want to trade with the trend. You want to trade with momentum. You're trading with that direction. Chock full of advantages. I dig it. So where's the first potential entry? The first potential entry comes right here at the area of support inside of favorable large triggers, right? If you take this entry, you probably got stopped out. That's okay. It happens, right? It was a 50-50 and it had divergence and it ended up pushing lower. And then do you see how all of that indecision happens? You had no idea this was going to be such a great lesson, did you? So check this out. I'm going to put a rectangle around 2 bars. And I want you to see, your 13.2 looks great, doesn't it? 13.2 looks awesome. But your 5.1 supports it once. You might have taken a small loss. You might have gotten that $100 and taken break even. And then it goes real indecisive. Do you see how the larger up, the smaller down? Everything's kind of wiggly squiggly, not real pretty. No real advantages here, but your 13.2 still says up. And this is a lesson for everybody, not just you, Philly. When the market isn't giving you a clear path, when all of your charts don't agree, one's red, one's green, up, down, all that sort of stuff, wait for them to agree. This is your opportunity to just say, you know what, I'm going to be patient. I'm going to wait for everything to go green with that odds favorable momentum. If you took the first one and it doesn't work, it gives you that patience piece to stay out of the challenging spot. And then when everything agrees again, there it goes, off to the races. Pretty cool, right? So Philly, that was an amazing picture, and your read on the large chart was spot on. And we were able to take that one look, that one lesson, and turn it into a patience piece to help give you the advantages of simply waiting for all of your charts to agree again. Of course you do. You're brand new. Guys, did you know that all of my engineer friends weren't allowed to build a bridge their freshman year in college? All of my friends with medical degrees weren't allowed to perform surgery their first year of college. Hell, I wasn't even allowed to teach students until my 3rd year of college. It's okay to be new. It's okay to be brand new. But guys, there's a very path. There's a very real path, a very clear path. Take those pictures, right? And keep doing exactly what you did, Philly. Keep posting those pictures, right? And now we can take that one picture and turn it into a double picture. Because that same picture that you gave me, it's a completely different scenario when I have all the information, right? And then if you add in there, trend up, maybe you don't understand the rules completely. Trend up, momentum good. Hey, Mark, need help with entries. Which is totally cool because entries are important. And then we get to have this conversation. And you're telling me, man, that's where I thought I was getting in, Mark. I'll say, man, I love your read. Everything's good. Let's wait for that advantage of all the charts agreeing. So great picture, Philly. Thank you for putting that in there. And I hope this is helpful to help you kind of, you know, maybe the next picture, show me 2 charts. Don't be afraid to vandalize that picture. I'm glad we were able to go back and find that picture and kind of bring it to light. So, guys, this is my favorite part of what we do, is being able to walk through things, being able to talk through things, being able to get you a little clarity where you didn't once have it. If it's going from here. Paul says, if it's going, that's where it's going from. He has a clear path, but he doesn't have strong triggers on his 13.2. Losing momentum, not only in trigger lines, but also divergence. So forfeiting momentum in the trade. And your areas are on the wrong side of the large triggers, right? So no areas inside. So if we look at the sets of rules and we say to ourselves, what advantages were present? Well, you had the advantage of a clear path. You chose not to embrace the advantage of momentum. You chose not to embrace the advantage of an area inside of favorable large triggers. Sometimes it's going to work. Sometimes it's not going to work. Sometimes it's a great trade that pays you. Sometimes those advantages played out. You never know which it's going to be. Oops. There's our result. There's crude oil. You ever get bored and take a trade, guys? You ever have to sit on your hands so damn long that you'll take any trade? I'm not saying that's what you did, Paul. Do you ever look at your checklist and say, well, this rule isn't met, but I'll take it anyway? These rules aren't met, but I really hope it goes down. I do it. I do it. You guys want to see which trade kills me the most? And I have zero problems admitting this. Let me show you my challenge, guys. When I'm having an off day, when my brain's not in it, when I abandon my checklist, let me show you exactly what happens. Right here, I get a bad top. So because of this bad top, I assume it's going down here. It's patterns, it's gap theory, it's all this stuff going on, right? So everything says down, it's a bad bottom, the market's coming up, and it almost hits resistance and starts to go. And you'll see an entry right about here. It's a bad bottom, it's a gap theory. It's going to go without me, and it's going to go to that fib. And then I get stopped out. And then this one gives me a down bar, and I jump in again because, man, I know it's going down. And I get stopped out again, and I'm like, son of a... And I take another one, and I get stopped out again, right? And I've lost 3 trades. I've lost, I don't know, $750 forming an opinion about the market, right? What did I do? I fought trend. I fought triggers. Guys, I gave it all up. I said, because I'm so damn smart, I know this market's going to go down. I take the first one too soon because I'm anxious. I formed an opinion. I want to trade that opinion. I take the second one from resistance because it's got to hold because of the gap theory. And then I get in at the mid band because it couldn't possibly go beyond the mid band, right? And then it goes without me. And usually somewhere right about here, I get run over again. Has anyone ever done that besides me? Have you ever formed an opinion and became so married to your brilliance that it blows you out on the day? I've done it. I'm not afraid to admit it, guys. I've done it. So let's go back and look at this again. What direction is the market going when my opinion forms? The market's going up, right? Which means I should only be looking for rules to be met for high probability trend trades. Guys, as long as these triggers are down, I don't have odds favorable momentum, which means I don't have odds favorable for a momentum for a long until about right here on a 50-50 trade to the upside from a bad bottom. There's the look on that 50-50 trade, guys. It's ugly. Actually, I think that might have been your 50-50 right there from a bad bottom. If I only trade with the trend, I don't take a loser. If I only trade with odds favorable momentum, I don't take a loser. If I only trade with a clear path, I don't take a loser. And guys, the second half of that is if I just sit on my hands a little bit, eventually I take a winner and get paid, right? Eventually it goes to the fib. Eventually everything agrees. Eventually I have odds favorable momentum. And everything says giddy up, yeehaw, let's get paid. If there's anything I can tell you about being a day trader, the hardest thing you'll ever do is nothing. Guys, good bottom or bad bottom? What do you think? Good or bad? Let's finish strong today. Is it a termination condition that creates a full reversal? No. It's just a pivot with a loss of momentum. Guys, price reaches resistance. How many trigger lines are through? Not one, right? Take that picture real quick just in case it finishes. Where are the large triggers, guys? Are they below the reversal bar marker? Is anyone surprised that it's pushing back to it? Gap theory, right? Bad bottom, termination, gap theory, not inside of favorable large triggers. How many things can we stack one on top of another to keep you safe? Who went short at resistance because of the gap theory and got run over? I've done it. Because there's no way I'm leaving 15 ticks of risk hoping that a red line holds, right? Guys, these are the lessons that we're going to do every day. For those of you that are brand new, first and foremost, guys, thank you so much for coming in, for wanting to learn this, for wanting to change your life. Gap theory, 100%, guys. There it is. Now we just have to wait for everything to agree. Thank you for taking the time to be in here. Those of you that post and ask questions, thank you for posting those questions. Because those questions don't just make you better, they make everybody better. And if you're one of the people that puts me up against the rope sometimes and makes me say things in ways that I'm not used to saying them, thank you even more because you make me a better teacher. Monday through Friday, from 9 a.m. to noon, I'm here for you. Monday through Friday from 9 a.m. to noon, we're going to talk about advantages. We're going to try to keep it simple. We're going to try and stay focused, guys. If you participate, you'll get where you want to be. Why then? Yep, there it is. Are you curious about odds favorable momentum and no termination conditions and a pullback to resistance inside of favorable large triggers? Wow. Pardon my French, but this shit works, doesn't it? All you have to do is be confident enough to get that limit order in place. Pretty cool, right? Then all you have to do is study until you're so confident that you never miss that look. That this becomes your go-to. This is your bread and butter. And guys, if you got in here, it moves so darn fast to that fib, you never even had a chance to get out. Isn't it amazing? This repeats itself. So Vin, great eyes. What is this, day one and you're already recognizing high probability trend trades? Imagine with 30 days of study. Imagine with 300 pictures under your belt. And 1,000 questions in this room, guys. This room works. The software works. Feel free to disprove it. Try your hardest. I'll help you. I'll teach you how to study it. I'll teach you how to backtest it. I'll give you a set of rules that I triple dog dare you to tell me don't work. It's your understanding of the software that's going to make you successful, guys, and that comes through repetition and practice. I'm giving you an elliptical. It's up to you to get on there and drop 20 pounds. I'm giving you a golf club. You've got to learn to swing it. Guys, that's it for me today. I hope you learned something. I hope it added a little value to your trading plan. I hope you're focused on trust. I'd really like you to come at this software with the desire to create trust, a firm belief in the reliability, the truth, the ability, the strength, right? Freedom from suspicion or doubt is what's going to make you a client. If you have suspicions or doubts, let's talk about them. I'll clear it up. Guys, that's it. Have an awesome day. Thank you so much for being here. I think this was a great class. I enjoyed it very much. I'll see you tomorrow morning at 9 a.m. and we're going to do it again. Be good, everybody.